So this is the POC here. Um, we were just talking about the dailies return back to the middle and the impact that that's had. I'm curious to see how it does it in the short term because this is also my middle. Like, I was curious to see how much it would respect a range that is so old. This range is incredibly old. Like, it hasn't been used in a long time, but neither of the other ones. And I mean, you can see how well it's respected them. Even with the spikes out of the bottom and then the spikes out of the top that have come to respect each side of the range from, you know, hitting it with force at the beginning and, essentially setting up a node on the underside of that green zone, responding negatively to it, and then finally conquering that to get to the red zone specifically so that it could come back and acknowledge the green again, back to the red, then the green. And then, it had very specific responses as it went through these levels. And you can see same thing kind of happened with this green zone. Remember back at the beginning, we kind of ran into it a couple times first. There was two large spikes into it first, almost like they have a system of being able to move through levels. I often say, how do we make it through green zones? We like to put a siege node on there so that when we come back from the red zone, we actually have something to stand on. And you can see that that volume that's in there is only there because of what we've done here. And at the end of the day, the people that don't recognize this range may recognize the volume they choose to put there. And I see why they even put the volume there in the first place, because the range is there. It's quite obvious. And the specific nature of the white dashed line is also of interest to me. I wouldn't be surprised now that, the market has started to come up. They start to release bullish news articles to make people buy so that the institutions have somebody to sell to. S- That's the thing, because like, best believe it was all doom and gloom by the time we were down there, and everybody's only seeing red, so they think it's gonna do more red, and that doesn't.
Hey,
Me.
good morning, guys.
Hey.
That's crazy how this thing just keeps going up.
Mm-hmm.
Last night, this thing didn't come down whatsoever.
Nope.
Do we have any reasons why we're going up right now in
Well, it just got
comparison to?
like, I mean it.
I just mean like in comparison to worldly affairs.
No, 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 no. It was just always destined to get back to 15K. This was before the earnings reports. Like I mentioned that all of the movements that we're going to do basically are going to end up back at 15K. And we're at 15K now. That white dash line is 15K. And this is where we are with it. Now we did respond to a 261. Like, so I'll make that clear actually. Yeah, that B point is 117 points down. Like that could look like a giant gap on QQQ. That's not much of one actually. Apple basically reversed at a 261, and it was also at my levels that I was looking at yesterday. Remember how I drew this pitchfork in at the end of the day, and I was like, well, it started out. Here, I'll take a picture. I think I took a picture of the. So remember we were looking at this yesterday, and it led to this movement. Okay. Now I'll show you the Nasdaq doing that same movement where effectively it started out in an upwards channel and ended up tanking down. So what I'll do is quickly take a picture of this again so we can see. All right, you see on Apple, originally it was facing up, right? And it was going up. But then when it broke down, did it not break down to this version? It did. So when we started it out on this one, it was going up, and then it broke down, just like this one. So it went up in that one, and then it broke down to this one, right? And then Apple, notice that it went up on this one, and it's remarkably, the red line, you see the red line on both sides, been a major culprit of this area, but ultimately the upwards one led to the downwards one as well. And I figured this out. It's like a matter of upwards movement in that leads to the downwards one, and it involves both of them doing that. I recognized Apple doing that to the upwards channel breaking to the downwards channel. It's like the upwards channel's purpose is to end and target the downwards channel. That's 2 times we've seen it happen, and you can count on the fact that people will not be in the way of it doing that because they will not understand that it's doing that to begin with. So it's something that we can see a lot more of. But something like the 5 wave move only coming back to the 4th wave, oh yeah, that'll be over soon. Because people will be able to start positioning themselves for it, because they look back in the past and they try to see what the market's most effective moves have been and then position themselves for those moves again, and it doesn't make them. So it's very interesting. It makes moves that are led by expectations, things that would make sense for it to do by a mathematical standpoint. It's not just on repeat over and over again. So a repeat strategy isn't going to work on something that's playing a different tune every single day. Unless you only go for part of the movements and go for an understanding of part of the movements. And I can't find comfortability in that, because there's some days where those parts and those movements may not happen at all. And then when you realize, if you've got a position, where you are positioned and why, it's not one because you're in control. It's just one that you have hope for, and I don't like that. I like to always have a target. I like to know where it's going. I like to know where I'm in from. I like to know, what the risk and the reward is at all given times. The blue lines played a pretty major role with the VWAP there and the POC there in the middle of the range there. We can see that it's not gotten much interest for many big players for a while. Doesn't mean it's not going to, but basically they're rounding people up at this level. Now, this level has never been the best place to trade, and there will always have been a better place than this place to trade. So it's almost like, why settle for this place, right? This place is terrible at the end of the day. So I just chill here. At the end of the day, if you've captured a position at this point, then it's absolutely fine. But like, not from this point, but if you've captured a position that is exposed to this point, it's absolutely fine. But you don't want to be exposed from this level, long or short. Effectively, it has come back to this level more times than any other level while it has been associated with this range. Now, it's not always going to be that case, but it has been the way uh, of today so far. And you can see in the chat, I posted the difference between the two, Apple and Nasdaq. both upwards pitchfork and to the downwards. And it was very inclined on making that apparent here. And it was apparent that it also used the upwards one quite well while it was a part of it. Now, of course, the yellow line that holds us from the very, very bottom here is being put under a lot of pressure. Another readjustment, perhaps. But it is true that this range doubled, as I mentioned it would, not too long ago. If you go back in the recording, you'll find that likely. Not much of a move, that's for sure. And everything has been very attracted to the white dash line, that's for sure.
Seems very in the middle to me at the moment.
Yep. Yeah, like I said this about it. When we were down, all the way down there, like if I zoom out, like we're gonna start to see, this is the white dash line. That, I literally stretched out arrows across all of it, and I marked it as the white dash line. And it's like, if you caught this with us, consider holding into next week's earnings and focusing on finding a hedge for the move instead of giving up these lows. It's human to want to escape with the profit. It will pull back many times. Focus on hedging instead of selling your core. Notice these short-term levels above. And like I tagged a post there. It was something that we used in the past, and like when I click that, brings me back to this post over here where we originally had these levels and we were buying them back up to that white dash line. You could see how with precision it was bought back up to that white dash line, and that was the deal. And we left it for great, after that picture I just put in there, after we responded to it here, right, and it hit it like that, right, it came down because that was in there. And then I stretched those levels across, and here we are, that same white dash line.
move going up.
Yeah, not bad. It's created a little bit of a blue line, but it's kind of already been using it. '61's been broken now too, or tested. That major 261, that one relates to a B point that's 100 points down. 117. And it's like, let's take a look at AMD, for instance, on the daily. You know, how far we've come on that, and what's going on with this move. It's over 19% since the earnings, and we're running into that move right there. We're just at the high of this level. This is exactly the kind of level where if one did get exposure, you'd want to make sure that you take a portion off. And then Apple, that one, no, it's, let me take a look at some of these other longer term ones. We can see Tesla, I was looking for the bounce off the green zone, but see it actually bounced off that red line right there quite well. See that on this chart, the Nasdaq indeed has come back into the range here. I think shorter term time frame. You can see that this was a line that was used as like a trajectory line for quite some time, and relinquishing the relationship with that was really key. And we can see we conquered that range by essentially stepping on top of it and leaving it. We've come through the medium point level again. We've tested the B point that was on top of the gold bar. And it's true that we came, you know, from this kind of environment where we were literally making, I can start at the beginning, I guess, but it does have a M into W, and then into M, into W, into M, into W. And every single time that seen that, you can see over the course of the hourly channel, M into W, into M, into W, into M, and of course, it gets a little hectic down there on the 1 minute because I used it as a short-term chart as well. But effectively, we've managed it through this gold bar, and just like we managed away from this blue, red, and yellow line, I think that we will manage away from this gold bar as well. But the negative response to the red-yellow line could be something of major interest. Now, of course, with this B point being hit, we have another major B point down here, and it's not even just this one, but it provides um, provides a new trend that we could draw in here. Or a new fib set, sorry, which is very large. According to this, we're only just at the 127. So where we are now is grinding the 61 on the short term. We're just sitting above 15,000. And you can see that it's kind of like the pressure's been taken off at the white dash line because they were pretty much allowed to buy back up to the white dash line without being caught for market manipulation. Now it's like they try to squeeze everyone past it, and it might be slow first, and the slowness gets us closer to this downtrend, or sorry, this uptrend. And I mean, just like this was a red yellow line, this one is now the line that I think it must not go unnoticed. It doesn't mean that its break is urgent, but it means that its final break be significant. I could leave this channel on, I suppose, but and a triangle we could see again in the future. I can't help but notice that the original rising wedge almost formed again, and I'm just like, you know how it went like this? I'm like, what is this? And it did it again. Very similarly. Yet it spent more time and did more gyrations in the smaller version than it could in the bigger version, which is fine because it's easier for it to make a smaller move than it is for it to make a bigger one. That's why we can see that potentially. Now, of course, like I said about the people from this middle area, no matter what it has given, since I was like, oh yeah, this is a crappy place to be in from no matter what, because it's right in the middle, it went down this much, up this much, and landed right back in the middle. And effectively, anybody that was exposed to any of the movements away from this point, no matter whether they took it long or short, it's been, you know, kind of counterproductive if they're still holding, right? From this point. So I'm like, that's okay though, because none of us should be in from that point. The elephant in the room is definitely the support line. Because I'm like, alright, well, you want to know what we did when we did the last move like this? You know how I say that it's like that? Well, we took that and we didn't do the whole thing. We put a decent amount of it beneath. Everything that happened beyond that point was wicks and spikes. And if I take this off for a second, and if I draw a new one like that, like who's to say not very triangular? Triangles are notorious for returning back to the tip, and I mean this one, it insinuates that there could be a little bit of snapping around. One thing I can see is that we've increased the volatility out of this area. On a very short-term time scale, you can see just like on the hourly, it was very interested in going from M into W into M into W. So just a bigger kind of version interested in making. Yet this one didn't make a W. And I mean, a change with this could mean that something is changing with the entire environment because clearly in this environment, we like to make this kind of movement. And just like on the hourly, there's like a medium point that it likes to get back to at all times. Notice that every M and W that we see, like it has a beginning or ending point at that blue line. And the blue line was a line that's an interesting one because that blue line was the line that was the high to a rising wedge. Now, what's funny about the rising wedge is the rising wedge is notoriously a bearish pattern. It has two trends, one going up, the other one also going up. And when it breaks out, it goes down. Now, it did not do that here. This line right here is never supposed to break in this pattern. So it's very interesting that the top line, which is like our blue line, managed to break. And I mean, it's not like it doesn't do that. It does that a lot in 2023. Probably done it more in 2023 than it has in the past 10 years. That's the irony, the amount of change that I can see, and the amount of difference that we have. Like we went through an entire phase of making sure that every single head and shoulders failed, every single uh, rising wedge failed. It was about a month for each of them. It would spend a month working on the rising wedges and falling wedges, making sure that everyone failed. We would even see patterns like this, where it would go, all right, everybody, rising wedge, and this is a bearish pattern, bearish pattern, bearish pattern, boom, out of the top, right? And then what it would do is it would make a bullish pattern, and it would form that falling wedge, which is exactly the inverse, and it would fail back to where the rising wedge failed. I mean, like, that's just an interesting environment where on Google you can find that there's only explanations of this going up, and there's only explanations of this going down. Yet the day before, they might have showed this exact same pattern going down. So is it just the pattern that dictates whether or not it's going to go up or down? Well, I can prove to you that it doesn't always go down. Yet I can also say that I believe we are closer to the next rising wedge going down than ever before today. So, like, the more that we see this, the more the public will find that this is what it's supposed to do, and the less it will actually do it. Just like when we're in a triangle, and it can be like really far distances from the distant from the baseline to the other side, and essentially as it goes on, it becomes more apparent that this is what it's doing, and then it does it more frequently until but what is it giving more frequently? Less and less and less of a movement. It's like try me now. Don't you see it's part of a triangle? And it's like what? For how much? Is that what you want to take? And I mean like that's nothing in comparison to what it was offering at the beginning. And it never even went from back and forth at the beginning anyways. It's just trying to get people caught in the middle because they think that it is triangulating and they think that they want to be part of it. Where in all reality, they just become part of an old range's middle point. Everybody herded into the tip of this middle area. You know, it's continuously offering less until it ends. And when it ends, it gives us this like dead zone where people are essentially trapped in that area for now. Obviously, as time goes on, we'll break one of these lines and get out of this area. But typically, what we've seen with many of the other symmetrical triangles is that whatever we do is overlapped. Option number one or option number two. And I mean, like, typically it's like that, but usually it can be like this or like this. And at what point inside of this triangle are any positions safe if it does option number one? Does it get you? Well, let's say it does option number two. Does it get you still? I mean, anybody that bought down here, you know, gets overlapped with that move, right? But if they did this one, looks like they get them too. And then same thing goes with the people up top. You know, this one, they'll get you. And then this one also. Best way to play the triangle is to already be exposed from a different point. To be hedged while it's going on is absolutely fine, but it's not something that honestly the best thing about it is it ending, and we're close to the end. I can tell you that now. Where there's less in this triangle than there ever has been before. That's the most positive thing about it. And that means that we're closer to a move that's bigger than this tip than we ever have been before, thankfully, right? Too. Because what it has offered anybody for the past 10 minutes, it's been very minimal. The last pattern to truly play out was this one. And it came back up to test the point. Now, as well, is it not true that this B point down here, 117 points down, is untested and has never, ever, ever been hit? So you could say that the levels that are related to that level, that tell us that it's going to come back to that level, could otherwise still be in play. Now, one of the most important levels that are related to this one is this 261, the gold dashed line. And everything we've ever done past that line as of now has only been wicks and spikes, but what is it not true that we have to break the red yellow line in order to get there if we ever are to get there? So there's no use assuming that it will ever get there if we haven't gotten through the yellow and red line. And if we're not positioned for the break of the red yellow line, well, it's going to be very difficult to profit on that. Now, of course, what I just said about the triangle, let's go back to that for a second. Ah, I can't get it back. That's okay. The two options. Now, in both of these options, if you're to think about this as a puzzle or something, what is the best play? If everything inside of the triangle gets overlapped by option 1 and option 2, no matter where you position yourself, you get smoked out, right? So, what is the case with this movement here that is the reality? What if you position yourselves from here or from here to get back to here? What about that? Because at the end of the day, in the event that it produces this or this, you want to know what the beauty of it is? Is when it leaves this triangle and it's retested in both directions, they could be small. It doesn't have to be as drastic. But at the end of the day, when you have done this, it's cleaned up all of the retests of both sides of the triangle. And who's to say that it can't continue with you? Or who's to say that it can't continue with you? Because that move can actually continue into something that can take this entire area and double it, or potentially double it. So finding that this is a kind of movement where you can get exposure that can actually allow you to be in for the break of the extreme, because this could be the red and this could be the green zone, uh, like this. Kind of like what we're doing right now. The triangle at the tip, the middle. And in my example, when you go for the trade that's coming back to the triangle, and let's say it pops out of the triangle, and then you take it back, and then it comes back to the triangle, and essentially, if you're trading back to the tip, there's a chance that this exposure back down can fall through the ground and continue going. And there's also a chance that in the event that you capture the trade back to the tip of the triangle, that there's a chance that we can continue through and it can end this environment. Because what this is doing effectively is it's ending this consolidation. The need to get back to this VWAP right here, that white line. It's essentially the average price of all of the people that are trading inside of this triangle. And it means that anybody that buys above it is essentially getting a worse average price than anybody that has bought within this triangle. So ensuring that you're always buying below and selling above is one major thing to look for. Not to say that buying won't work above it or that it can't go up above it. Definitely can, but it's a rule of thumb that you want to beware that there is more risk in buying above it because there has been better prices below it. And why were those not valuable becomes the question. And why can they not be waited for again becomes another question. And it's like those are major thoughts that I've had, and they make you patient for what is more valuable. At the end of the day, it can spend a lot of time in the area that is not valuable, as you can see. But what has it done for the people that have chosen to trade in that crappy sideways movement that has been otherwise centralized in the middle? It's overlapped them so many times I can't even count at a quick glance. It's like it's trying to make it tough for them almost by placing the exact amount of spikage below and above, tons of indecision right back to the same line. But all of it could come to an end within the next 3 minutes, or well, minute. It could be literally. Because how much triangle we have left? I mean, not much. And I mean, how much of that red yellow line how long can we spend above that really? Anything that we try to do to stay on top of that line is subject to being taken back when we do break that line. So I'm like, you know what? It's like, think about it this way. Say we popped up and it's like, oh yeah, wonderful, wonderful, wonderful. All of that pop when we do break is likely to come back. Doesn't matter if that comes from here or from wherever. It's best, to be honest, to readjust that trend. If we did that readjustment, we would buy ourselves so much more time. Leaping off of the trend with a ticket back to test the triangle, I don't particularly like that very much. But there is fibs that can be applied, and like the interesting thing about this area is going to be valuable for applying fibs Uh, no matter what, like, and it doesn't matter if we go down, we're gonna find fibs for that level, for this area. If we go up, we're gonna have fibs for that level. And I mean, you know what these fibs do is they insinuate that there is some need to come back to the triangle after we've left it, which ultimately is a huge waste of time. Yeah, if you know it's gonna happen, it's like, oh geez, well, we got one of these things again. Here we go again, you could be saying, right? At the end of the day, it's very much like one of those situations. Now, like every other triangle we've ever had in the past, we have ended every single one of them, or we'd still be in the last one that didn't end, right? That's the logic of it. So it's like, oh, okay, and we move on from that as an understanding. So it can't be a fear or a worry because it's an understanding, and that's the way that I look at it like that. It's clear and you know uh, positive as well, which is good. But the blue line, eh? Like, what's going on with this thing? As much as I love to recognize that they're there, man, is it ever a nuisance to get off of these things.
It is a big triangle, though, right? Like,
Oh yeah,
I think the bigger the pattern, the more kind of like pressure you need to get out.
yeah, yeah, yeah. And I think because the market has been rallying for a few days in the short term, a lot of people will be trying to accumulate short positions. I think, and effectively, it's been continuing to do the up and sideways movement um, that I was talking about a few days ago. Instead of it being able to make its standard pullback, it it does this kind of movement. And like I before we saw that, I did make it clear that we've never seen that in this environment before, and and I wanted to start to see that. And funny enough, after this picture, after it did that, like it literally did one more. It did one more of these things. One more of these things. Right after I was done saying it's going to continue to do that, it's going to stop doing this, and it's going to start doing this. It's very interesting. This was the last one that it did, though. And obviously, anybody that was exposed from before that was unthreatened by it doing this. This was just basically it taking back its pop. I'm like, I'm expecting us to start to get less pullbacks, more up than sideways now. Very clear, very serious. I expect this. It doesn't have to change for me to anticipate the new environment. The thing that we have seen over and over again starts to change, and not because it had to show us, but because it was expected. Keep control. The plan is clear. There's likely to be a fake break, very likely. So beware of that short squeeze. So when we did do that again, by the way, it wasn't like it was just like, oh, super unclear. You want to know what I said about it? After I just finished explaining that, what I said about it was, So now we have a new red yellow line. Literally, as soon as it came down to those levels, I was literally targeting the break of it. Any hedges off the yellow bar can be trimmed here. The continuation through the gold bar for positions made at today's low is what I'm looking for. Very, very, very clear. And literally, as we continue to get closer to that level that I was saying we're going to break, I was just confirming. Every seller is about to be made into a buyer from what I can see. A negative response to the red yellow is common before breaking it upwards. So just reassuring everybody. And literally everybody was turned into buyers. Like not a single seller survived that. And that's how the market ended this kind of environment and started this. 1, 2, 3, 4, 5, except no 1, 2, 3. That's how it works. Goes up, then sideways, then up. Particularly, I've noticed the only thing that it'll come back to is the fourth wave. So it means the only people it respects enough to allow to profit are just the fifth wave people that take it back to the fourth. By the point that it hits that fourth wave, if you're not safe, you got to cut the whole thing. That's the safest way to play it. Because at the end of the day, if it keeps doing that, you know, like look what we did today. Is it not true that we did 1, 2, 3, 4, and 5, and we were only able to come back to the fourth? Not that this is your authentic, beautiful looking 5-wave move, but I'll tell you one thing, it's a matter of fact that there is 5 waves. As ugly as it may look. 5 do exist. And on the fifth it did come down. On the fifth it did break the trend. On the fifth it did return to the fourth. So I'm like, well, okay then. It's a fact. So that's the proof. So it's not a matter of my opinion. So if we understand the facts so clear, it's like if somebody is showing the math over and over and over again, like this is how you calculate multiplication. This is how you do it. Here's another correct answer. Here's another correct answer, and another one. You start to think, well, this must be the way it's supposed to be calculated. Or else there would be some random nature to the results, but there's not. So the blue line here is another major level to consider. And it's like there's a few blue lines on there, right? So what I'll do to make this one stand out is make it into a blue and white line. The other lines, I can turn them down a little bit so that they don't have as much emphasis. This line, I fear to turn down because it is incredibly useful, so I'll keep that one. The other one has enough emphasis with it being blue and white. I'd like to think. At the end of the day, we did break through the 261 B point, or sorry, 261 that has a B point that's 117 points down. And obviously, as I mentioned with that post, is it's not about giving up the long trade because you're afraid of a 117-point drawback, but there's a value of 117 points at the minimum for any hedges that are acquired. So doesn't mean it's going to be easy for them. After all, it shouldn't be. You want the core to continue, but anything that it does against it, you can be prepared for if you're in the habit of hedging. Couldn't have said it any better.
I guess there's a few developers here in the city that are about to go bankrupt.
In your city?
Yeah,
Interesting.
like major ones.
The glass city of future Canadians.
Yeah, there's like I think 6 or 7 major development groups, and I think like at least 1 or 2 of them are rumored to be going bankrupt here right away. They can't like I guess they're having problems hiring people, so
I,
they can't meet their deadlines.
I picture you guys with those, those things they have in the airports where you can walk on them and they make you go faster. It's like, yeah, those are our sidewalks.
Yeah, I wish, man. I wish. You know what's funny is every time time I go to the airport, um, I always use those, right?
Oh, of course.
And
How do you
I'm
not?
always the only one on them, bro. I'm
What?
always
Like,
yeah,
well, you need
I'm always looking
exercise.
to the people beside me, and I'm going like two or three
Uh,
times faster, walking half as fast, and these people are just walking like regular peasants
yeah, no, you have to.
beside the escalator that moves faster. Like, why
Yeah,
wouldn't you use something that makes your life easier?
yeah. They saw Jim got trapped under it.
And like 2 or 3 weeks ago, I don't know if I told you, I was going up, like I was going up the up escalators onto the second floor in one of the malls, and there was a girl. She was maybe like mid 20s. She's like texting, and she walks past me as I'm coming up and stepping off of the up escalator. She walks on and basically trips, and she throws herself down the fucking escalator.
Oh my goodness.
She didn't see it. She was texting, and the up escalator brought her back up the stairs.
As she was like laying on it.
Yeah, yeah. She fell down like 4 or 5 steps, and
Oh,
then
that's
she just
brutal. Those
gets
things
up,
are. I don't know why they
acts
have
like
to make them
nothing happened.
such a brutal material. Because they're like jagged metal, like
The
escalators.
down escalator's not even on that side of the mall. It's on the other side of the mall. So like there's only one set of escalators and they go up.
Damn.
And she just yeeted herself.
Oh, they make you walk if you want to use the escalator.
Literally, yeah, yeah.
That's
She's
mall
like,
for you.
I don't want to spend that much energy. She just throws herself down.
So now, is this that upper part that maybe you would buy to or whatever so for it to go down here, like you had drawn that little S wave? Are we there at the top?
Well, the thing is typically we like to look at, it doubling at the minimum. At any given time, it could make a move back to this blue and white line, but the more appropriate spot to do it from would probably be from this level, uh, and or if not this level. We've been seeing a lot of this level lately, but what we just did at that level was very grindy. So sometimes what we like to do is actually get up to that 261 and only come back down to that level and then continue higher. Something like that could be on the table, but I think that we're getting ready to leave this range here, and maybe coming back to test it from above could be on the table. We're getting more familiar with breaking the red zones and the green zones now, I think, than ever before. And we can see the volatility undeniably increased out of the tip of the triangle. But there are some pretty big fibs on here, like this one here. In the event that we could get through the highs, we could develop into a pretty large fib set there, where there is another red yellow line, the daily red yellow line on across the highs here. That's the only line I'm looking at right now, just this one, and that's coming across the highs. The rest are all short-term lines, not to be considered on this chart. But this line right here is the line that effectively is just a little bit higher. And that's the entire downtrend from the daily highs. And in the event that, this move and all of the exposure that, I've said is being obtained by the major institutions that move the market like this, regardless of, the report or not, it was all just manipulated in favor of the positions acquired before the AMD earnings and before the Apple earnings, before all of the earnings. And they had absolute control the entire time, and their intention was to bring it right back to this point, and they did. So it's very much going to be like a you did it situation for a lot of the institutions, or it's a good job done situation right now. Positioned appropriately, got through the risky events. The assets are now continuing and advancing with less people in them than before. and with more institution than before, regardless of whether or not they release that to the public is one thing. Whatever they do release to the public, I don't believe it as far as I can throw it, but oh, I didn't post the picture of the last chart. Testing the 261 from above is normal. Could also look like the blue and white line. Just taking a look at that report movement. It really didn't do anything but come back to the green zone. Any hedges basically would only make it to the green zone, nothing more. So like I said, we're closer to the next rising wedge actually working than ever before. Like we have one again. And one thing about that is we may be interested in returning back to the tip one last time as well, so we have to watch out for that. Sort of grind until we get to the red yellow line is also fine, but like I said, even for shorting, it's a little bit low in terms of fibs. 161 was used a lot yesterday, sure, but the 188 is at the tip of the triangle and a little bit more attractive. Of course, anything that it does beyond this point is subject to being taken back on the break of the red yellow. Pretty straightforward though. Almost at the 188. This one, I find it likely that what we do out of the top of the triangle will be smaller than what we do out of the bottom. Curious about this one. Looks like it's responded with absolute precision. The 188-200 so far has had a negative response. Anybody that's acquired anything at it is profitable. Now, of course, if you had your stop at the extreme originally, it's unthreatened. Like I said, I do expect it to be more out of the bottom than there was out of the top. To be clear. Yeah, like in technical analysis, it's like a collection of moves can form meaning in a bigger picture, just like in language, collection of words can mean, a sentence that has a bigger meaning and has a implication, you know. Um, is what we see here. Like a language, it explains clearly that it wants more out of the bottom than it had out of the top. And why is it that this is the case? Because it's never been the case with any other rising wedge of the day. You know that every other rising wedge of the day has always managed to make it out of the top more? Why do we demand it to be this way, yet we've never seen it that way before? Are the individuals responsible for making the change? Well, I don't think so. But it's not because it's obviously doing the same thing over and over again. We expect it to continue producing the same result out of the same thing, so you lose money. Yeah, people follow that idea of repeating the same thing over and over again, and expecting the same result. Doesn't The market doesn't respect that, ironically, and a lot of strategies are tuned in to be that way. That every time that you implement that strategy, you expect it to move exactly the same way for you in that environment, in that pattern, and hopefully the strategy itself isn't just identifying the pattern, because the pattern itself isn't good enough. It has to be a lot of other confluences that can give us the idea of why it's interested in making something so particular. Like why did it want to be more out of the bottom than the top when it's never done that before? And it may seem insignificant, but to me it's just another signal of control that they demand it to be this way because it's supposed to be. And not because it benefits me by making it bigger out of the bottom than the top, but just because that is how it's supposed to move. And of course, as I mentioned all of these levels, the last thing that I mentioned was this. Currently we're below 261 where the B point is 117 points down. It doesn't mean give up yesterday's long, but finding a short trades while we wait for it to continue up is not a bad idea. And so far, every single counter trend move that it's done since it's left the triangle has been 16 points at the minimum. Of course, no stops are safe above the 261 gold dash line. In the event that it gets tested from above, any positions will be stopped out if you drag your stops above it. Moving like it wants to try and get on top of that 188 200, so beware.
Hey John, you still looking at the 261 for a good hedge position?
The 261 up top, or how do you mean?
Yeah, the one up top.
Um, it depends on how it gets to it. It's still quite a ways away. I think that there's a good chance that if we get to it on top of the red yellow line, that it'll be different if we than if we got it to it underneath. So I'm curious if we try to snap underneath this red yellow line first or not, because it could change how we respond to that 261. There's a new trend that's formed now. It's making it a little bit of a triangulation on the short term. The blue and white line's really close by too, and getting that out of the way is not a bad idea as well. Another thing I can see here that we've been seeing a lot of lately is 1, 2, 3, 4, 5. Only coming back to the fourth, I can see. Interesting. That is going to be put to the test as well, like I said earlier, but it is interesting to see it come up every now and again. As part of this move that we're in now from the very daily lows, it has been interested in making that move predominantly. Like yesterday, we were looking at it as a up then sideways kind of movement. I wanted to see it do this. Yeah, and like even when we were here and we were fighting for the break of that trend, you know, I made it clear in that environment. Just like yesterday, if you were in from the day before, the task at hand is to find a hedge for any long trades, not give them up. And the next picture is literally like that. But yeah, it had a negative response to the downtrending line. And like I carried on even in that environment to explain here. Beautiful movement exactly as intended. I had a arrow drawn up there. Short-term range played out a 5-wave move. See, a very short-term range. Green dash lines hitting as a result. Turned off all the old red-yellow lines and turned them into orange ones. They're used up in finish. Emphasis has been removed from them, but I still leave them orange because they could be good for retest still. And of course, not even a moment later, all of my targets hit again. Notice I haven't put any green dash lines. I don't want people trying to really go for them, to be honest. I haven't been attracted to them yet. I haven't been going for them there, but there are some untested B points in there. Like this one here. That one's the most that was the hottest B point around right now. You might be thinking, well, that's not very far away at all. But it is obviously the first. Can't get to any other without going through that one, of course. There is another B point that's a little bit higher, of course, as well. We can see this one comes back quite some time ago. Wow. Yeah, it's old. It's old enough.
I actually have that beep one as well, John.
Oh yeah.
Yeah.
It could be one that sends us back to the 188 200. Basically, we could see it try and test the W as well. So it basically means no stops are safe above it. And generally speaking, it's kind of unsafe to drag your stop into a move that's running out of the node. Like you can see how it's run out of the node there. It wants to come back and touch the node. That's pretty normal. And it's subject to changing. We have to understand when it does change though. Not always will it be like that. I can see that originally when we got into this environment, it came in by using a relatively similar kind of spike. Which is all like, it's a fact that it was separated by a consolidation. It's a fact that the spike on the top is relatively similar size than the one on the bottom. And I mean, you just look back a minute ago and we can see that something very similar with this kind of environment in here is trying to make a spike on the top and on the bottom. Say that it even had that same spike or a similar one, but trying to be on the other side as well. Absolutely okay. We see that quite a lot. I find it intriguing that with just a test of the fourth wave, and that's it, we're able to carry on past the highs. The 188 200 rendered insignificant new high of day. A lot of individuals will be in the situation of, even if they were long, it's likely that one of the next few barriers will convince them to sell their position. The last thing they'll think of is hedging. The last thing. And like on the masses, like most people are going to be just trying to buy in a position and escape with the profit before it takes it back. And it's like that just makes me think of how the institutions don't have that luxury. Like they don't have the ability to liquidate a position really easily. They don't have the ability to just take a day off if they want to. Like that's the curse of owning the exposure, is that you have to actively manage it. And the best way to find a protection against a position is to have one going against it, so that in the event that we get a movement like this, if you're in from here and you expect it to target this level in the future, if you take this short as well, that just adds on to your profitability for while you're waiting for it to get to your target. As I say, I'll explain hedging in different ways every single day. I don't expect you to be able to get it in one. At the end of the day, sometimes the explanations can be a little bit more complicated than others, but they're all relative to how you can do it in a situation that we're currently in, or why it's relevant, and exactly how it can benefit one that's in this current situation.
Instead of hedging, could we just not use a smaller portion so it's the same effect?
How do you mean smaller portion?
Like you're saying if we hedge, we betting on two sides. Like if one goes,
Mm-hmm.
then we don't lose so much, right?
Mm-hmm.
And instead we use just like instead of 100 euros, just like $10. I would
Well,
say like 10 euros.
yeah, like
And
that's a good way to look at it. Like, so for instance, like let's say if your position value is 100, and if you did like maybe not 10 because that's only 10%, but something like 30 against it, then that means that when it comes down, you could take 10 of that 30 off, and when it comes down again, you could take another 10 off and another 10 off, and that means that while you're waiting for this 100 to continue profiting, you didn't turn it into 90, you didn't turn it into 80 because you were worried about it coming down. Instead, you made money on this 30. And most people, they will end up with no 100 anymore. They'll have like 70 by the end of it because they were so scared about this level that they sold off their position and now they don't have anything left. And it's really normal to have that because their go-to is to sell. Like what they do is they look at the high, they look at their move, and they see the profit, and then they start to feel about it, and then God forbid it moves against them once and then comes back to that same level like it did here. You can count like maybe a dozen people at least got eliminated out of it just giving them their average price back. Now that it's even higher, they wish they didn't sell, and now they have nowhere to get in. So it's perfect. So you know what's funny is they think most people how it will go now is, oh well, seeing as I can't buy low anymore, let's start thinking about selling high. Now they start to short and then they get squeezed out of their short position, and it benefits the people that are holding with patience and discipline from the bottom. And now the people that have been knocked out of their trades just because they sold it because of the pressure of their own profit, you can see that everyone's getting squeezed. The 200 and 188 offered more than our average counter trend pullback. Wasn't just 15 points, like a little bit more. After all, it managed to get up to the longer term profit target there, or the longer term B point. It's created another one down here as well, so like no stops are safe above those highs. And obviously everything that we've done above that red yellow line is subject to coming back on the break of the red yellow line.
And it goes to that 261.
Yeah.
I think it might be a great opportunity to hedge there, John. Then the 261, and that might be the ideal location. Or
Honestly, I'm not feeling it as much right now.
yeah,
Like everybody's getting squeezed right now. I think the play is to continue holding. The institutions with all the money are clearly long, and they didn't offer anybody much to get in today. It was all about building off of what the right trade, and the right trade is to be long and to keep focusing on that. Yeah, from what I can see, there's still a bit of space between now and the red yellow line, but I think that we're going to be increasing the volatility from now until then. But ultimately, I think that it's interested in creating a little bit of a node. There is a B point there, but it's very close to the 188-200. And before, like we talked about, the 261, if it does have a negative response, what it could be worth is just the 188-200. It may not even come back to its B point. We have to understand that as well. Of course, no stops are safe above the B points, but it is risky to try and go for them. Ultimately, everybody that's trying to sell up here is going to be turned into a buyer by the end of it all. And the rest of today might be sideways, literally. So we have to watch out for that because they're going to lock in these gains and then hold them. Little bit of a dip at the end of the day to create indecision is absolutely fine because a lot of people will be trying to fight for the dip, and those that fight to the very end will get some sort of relief most likely, but at the end of the day they better be doing it because they're long. At the end of the day, most of the people today are trying to burn their accounts going short only on the market, and that I think is one of the most dangerous positions to be in today, as I mentioned many times. So it's very much of it's not like there's nothing to learn from that though. There's a lot to learn from a day like today and how it can be, because you know that this is a day where the institutions will I would assume that they feel like they've conquered it. They feel like they have avoided the risk of holding through the earnings. The assets are all safe. Everything was pulled off correctly. So we wait for Nvidia now. Nvidia has got 5% of the entire Nasdaq index now. It's worth more than Google to the Nasdaq, which is crazy.
I don't actually have any positions open right now, so I guess now it's just chill time, right? I guess for a little bit.
Well, it depends. Like it on a dime, it could change. Like we're almost at the 261. How we respond to it, it could be attractive. Like I can't tell you until we get there. At the end of the day, if we run at it, it's different than grinding to it, and it depends on whether or not it gets there, leaving V points open. Like, is it true that we're getting there, leaving these little V points open? Is it true that you can manage a profit off by putting a sell order on those levels and actually taking profit off at those levels and managing to hold the rest? Is it okay that it comes back multiple times before breaking the red yellow line? It's like I don't know if that's okay with some people. I mean, like, is it a fifth wave? Yeah, 100% it's a fifth wave. Is it okay that it just comes back to the fourth though? You know, for some options and stock traders, it might not be. At the end of the day, how's it going to treat the people at 261? Yeah, those short-term B points are likely to get hit off of the 261, but as I said, it's good to just make sure that it's like, if you're just shorting it, you're fighting against the grain and you're fighting against every single institution that's acquired in this run. They've made sure that every 5-wave move has struggled back to the 4th wave, and that's it. No more head and shoulders that takes it down after the 5-wave move. As I said earlier, though, I do expect that to be changing soon. So we're going to start to see 5-wave moves play out more. Will it be this one? I can say that making it safe down to those short-term B points is the play. If it allows you to be in for more, then that's fine. But making sure that you drag your stop into profit and or take off enough contracts to ensure your safety is absolutely key in environments like this. Because we've got what is it, 20 minutes if going sideways here? What could it do in 20 minutes if it wanted to go sideways till the trend break? Just like we did here. Except, is it more likely that we're able to continue up like this off of going sideways? I would say not. If we go sideways and try that again, it's less likely to be able to produce this out of the same thing than we did before. At the end of the day, the number one clarity for me is that the red yellow line on the daily is getting close, and it's just right there. That is the line that, in the event that we break that, the entire downtrend from the daily highs is broken. The whole thing from how many months or weeks ago? So like that trend right there is incredibly serious. It comes all the way back from July 23rd. Or sorry, 19th, July 19th. It is effectively 107 days old. So every bit of the every bit of the downtrend can be taken back on the break of that line, and we could continue. This move that we have right now from the daily low to here, we could actually double it. So it's like, I don't think the institutions are gearing up to find a hedge for themselves right now. I think that they're gearing up to try and get people to short it so that they can stop them out. And they're trying to go for round 2 again over and over and over again, they're going to keep trying to stop people out. There will be some bigger moves, just like this one. I'll show you. The other day, when we had a move like this, like the one that we went over earlier, where it comes back to basically test triangles and test B points, and then entirely will wipe out that move. And I mean, like, it doesn't mean it's worth giving up the long for, and actively managing against it, is key. Understanding that you have to keep an aggressive approach with taking profit, an aggressive approach with protecting your trade when you're hedging, because you're fighting against the grain of a trade that you intend to keep for the long haul, and position from a great spot. And with all of these risks out of the way, assets are free to continue moving without some event lingering over top of us. And all of the major risks to those major events going south are out of the way. And the likelihood of the public being able to gang up together and sell all at the same time or buy all at the same time drastically diminished on a day like today, ladies and gentlemen. Because what event are they gonna be able to flock together with? Because they all watch the news and they all respond to it very similarly. Just like like in nature, you can expect certain things to respond. Humans do the same way on the whole. And the beauty of it being a long-term reversal from a long-term low, like now, like let's say for instance, like a day like today, where it could go sideways for the rest of the day today, and if it starts tomorrow higher, like where does everybody else find themselves part of it? Is it not true that the market expected the most profitable people to be in for that day? How would they end up being the most profitable people if they're not in for the biggest move of that day? And on a day like today, it really insinuates that the market really respected the people that had the guts to hold. And having the guts to hold doesn't mean that you just sit there and watch it go from $1,000 back to 100, but you target that $900 difference and try and make it while you're waiting, because that when it goes back to that 900, when it goes down that $900 and you've still got $100 profit, it's not as low as where you are, and settling for that low that's here is not as safe, and everybody gets caught in that because nobody has the integrity to withstand the 90% pullback. And the only reason why it does is because it works. That's why I explain it. They implement this against the public because the public responds a certain way, like clockwork. That's my point. And they've got it down to a science, and the public doesn't even know that they're being plotted against. They think it's other people in the public that are responsible for the moves. And I just find every single day that, their analysis is nowhere close to the market's movements. And I mean, I look at whose does, and it is the institution. It's got it written all over it. The mathematical precision, the amount of control that they like to have. Do you think that they feel comfortable out of control? No, 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 no. Constant control all the time. Or they get new people. At least they wouldn't be very good if they didn't, right? So, and I can see they have an incredible impact in 2023. A noticeable one, I'd say.
You might be muted.
Oh yeah, sorry. The people that relinquish their positions in that level, they never, like, I mean, they're going to be regretting the fact that they sold, right? Just because they found a risk at something like a 188, and because it could take some of the profit back. Some people count them out because they can't deal with some of the profit being taken back. Look at how much farther they would have had if they kept it now, right? And at the end of the day, I think that more squeezes are going to be on the table. This is, I think that the institutions right now feel is very much like they're milking it. And fighting against them is not wise if you don't have their positions as well. If you're hedging, then you're doing as they're doing. So I wouldn't doubt that they are doing the correct thing. After all, to get to their position, a lot of the correct thing must have been done. Just the logic of the situation. So what they do should be considered. This is a major B point down here. And at the red yellow line, we roughly have a 188 200. But it's like very much like fishing, in the sense that, like, if I find a level that I'm interested in, I will certainly mention it. But at the end of the day, the clarity that there is right now is that everything that it does right now is subject to coming back honestly to this level over here. Every single bit of this push at the right time will come down, and it can be from as violent of an environment as this. Literally. And who's to say it can't get to the 261 and 100 like that, where every single moment it makes a higher high and a higher high and a higher high. That's how you churn people out, and you make sure that they're not there by the end of it all. At the end of the day, getting up into this range, we have a green zone and a red zone here. This is another reason to go sideways. It's another reason to smash it twice and then go sideways on it, and then go above it and try and hit it again. Literally. Like, the reason why like let's take a look at how we do it with some of these other ones. Like, is it true that when we get to this green zone we smashed it twice and then we chopped it and then stepped on it? Exactly like that. And then, when we dealt with this one, we got involved with it like this and we went up, smashed it twice. Unless you think this is the work of the public, right? With this much precision on ranges that are over a year old. No, it's the construction and the work of an entity that is very significant in the market. Because that amount of precision is not the work of the public. Not for 2 seconds while I believe that. Because most of them don't even look at charts. A lot of them get it managed by people that also don't even look at charts. So, really interesting. They'll read reports that are literally printed out by other people with their own opinions that are easily, shifted. But And they're not facts. Like when I tell you that there is a triangle and there is an angle, there is a B point, there is a 5-wave move, there is a this or that, it's a fact. It's not my opinion. It's not my opinion about their earnings or their progress or their whatever. That doesn't have anything to do with it, in my opinion. At the end of the day, it's all about the chart and exactly what it says. Or else, why is it the case that we can pull up something like the dollar and it does it too? It's not even a market. It's the dollar. Why does it go exactly to my target? It's a currency. Why did it choose to go right to that green zone? It's directly related to the break of the red yellow line. You could say that this green dash line here too was part of it. But the green bar was more important than the B point. Or else it would have gotten to the B point, no? But the analysis that I have on there that you could say is not one that most people would have is working like more aggressively than the obvious basic harmonic pattern. And then why is it that things like this would be the case, And I'm like, I find it um, incredibly unlikely that even 10% of the public are aware of it, even being able to do this. Even in retrospect, having looked at the chart like this, I find that it's very difficult even to just after the fact, even if I show you this, can you draw the analysis on there? Again, that's another thing. So I'm like, even with looking at the chart, can it be found after the fact and work as precisely as it was working for us when I had it in there before it made the moves? So I'm like, it just makes it very, very difficult to believe that it's the work of the public, that they understand the value of the middle bar, the medium bar, and the distances between this range, like how it all started and why it was so interested in making things so exactly even multiple times. And then on the end of that relationship, no more equality. And instead, it ended the relationship with it by making a move that was roughly that size. Ironically, that was the distance that it made out of both sides and the distance it decided to make the node. Not my opinion either. It's a fact. That's the interesting part about it. Is who chose that then? Or is it just random movement? So precise? I'm like, I can't assume that's random movement, but the inclination of all the people that make tons of money by moving the market around. And the people that try to catch them don't understand how the market moves, so it's really hard for them to get caught. Because if the people that tried to catch them understood how the market moves, why wouldn't they trade for a living? So it's interesting, because they certainly don't get paid as much. So, kind of an intriguing thought process. Unless the people that are making the moves are the people that are doing the catching. That's the only other thing that I could think of. But I I I give it to the institutions, not the Federal Reserve. Actually, I could say that every single time that the market makes one of these gyrations, it's the composite man or the Federal Reserve or the institutions. But in all reality, it is entities that possess over 1,000 times the amount of money as the individual, the average individual, 1,000 times multiplied. So that is a fact that I can see. I don't care who it is. It is true that they have 1,000 times more, and that gives them the ability to nudge the market in very small ways. And if they can nudge the market in small ways to trigger everyone else to trade in a certain way, and let's say you've developed a really, really strong position, and you can trigger the market to move in favor of that position profiting. That is market manipulation, and it is illegal, but it happens every day and it's happening right now. So quite interesting. And it's like, here's another one for you. If it was the average person making the market move so precisely, and it wasn't because they were aware of it, then why would the market choose to move so precisely for people that don't have precise analysis, that don't have precise targets, that don't have any kind of plan? They just buy into the stock because they want to be in. They want to see what it does for them. They don't have a target. Not a lot of people, you know? So it's like interesting. When you buy into a mutual fund, what's your target? Do you have one? Do they even talk about it? Or are you just trying to make more money? Because that's what everyone's trying to do when we get down to it. So it's like, in my opinion, I like to make it very clear, black and white. You know, it's you can tell I've been annoyed by the beating around the bush of the professionals of our day and age, because you can't get a straight answer out of them, and that annoyed the crap out of me. Made me focus really hard. You know, I was like, damn, it drove me. But you can see with this environment here, this 261, it's a fact that it came down to test it. So it's true that this one was never tested here. And you know what's interesting about that one is it's a lot bigger than this one. From what I can see, yeah, it's twice the size. So you know this one right here, it managed to move this far away from the 261, which was roughly to the 288. Now, we've went way past the 288 of that fib set. Let's go ahead and take a look at what that would look like. I have a B point down here, and I just want to place a fib. Honestly, not at the not at the very top of it either. I consider the volume actually starting from there. Because like when I look at that, I'm like, what happens past that point? Honestly, it's all bullcrap past this point. Nobody really traded past there, right? Like it's like, what do they do up there? Nothing. At the end of the day, that could really kind of tarnish the accuracy of the target. Now I can see that when we got up to that 188 200, we did have a problem with it. We did come back to test them out. Anybody that shorted that 188 200 in there, right? Like look what it did. It blew past them and came back to them. And that's telling me, you know, that it actually can be placed there. Because is it not true that that's what we do to 188 200s in this environment? We come back to them and test them from the other side. If they're lucky, they'll get like a bigger one, but this one is just terrible. At the end of the day, it doesn't mean it's not going to get hit in the future. It's at a controversial level as well, but yeah, no, definitely today is a day of a squeeze. Think about how terrible this trend has broken every single time. You know how big this trend is, right? This trend comes from the whole run. It encompasses the whole run. And I haven't readjusted it since the first point. Look what it's done. Every time it's actually psyched people out. And every single time it's ever managed through that line, it is decided that the downtrend is more important. The downtrend is more important. Downtrend is more important. Unbelievable. This little line up here, the audacity to break that line like that instead of the big bad red yellow line. Interesting. Everything that comes beyond that line, like I did say when we were breaking it, everything that we try to do to buy time with this red yellow line, it is subject to coming back. But it's not going to be easy about it. Like what I said, we had what 20 minutes or whatever, 20 minutes of it chilling up here, and it's been around that. Yeah, terrible. The terrible 20. I guess it's okay though, as it's almost over. From what I can see, we're interested in another one of those audacity lines like we had a minute ago. It's like, wow, again, we're this much higher on that red yellow line, and it still can't find a way through it. And it's like anybody that's given up their long trade to instead fight against is almost like they're absolutely destroyed right now. I mean, if you think about it. But if you keep it within the rules, and you and as I said about yesterday, remember when I was talking about the back burner, you throw that chart on the back burner, put it on a side screen. You know, stop at the extreme, put it on a side screen, and you're good to go. Rhymes. I like it. So that's the way today. At the end of the day, we're gonna make sure that we get these other levels with hedge trades, though. This line is a threat to any hedge trades that are in play at the moment. Also, is it not true that 5 wave moves have just come back to the 4th wave, and what is it to assume that it's going to do more? Well, I think that to be prepared for it to do more is key. However, by the point that it makes its way to the 4th wave at any moment, it must be made safe. Because in the event that it continues doing what it's doing, God forbid that affects you negatively, if it does it all day, what are you going to do? At the end of the day, making sure that you're safe by the point that it makes the average counter trend pullback is really important. Because how much does it pull back when we pull back? And is it as simple as that? Like when we pull back, do we pull back a certain amount? And is that how much we seem to pull back while we're in this trend? And if that is how much we just pull back, well, is it allowed to pull back that much? Should we allow it to pull back that much? Of course we should. Because if it just pulls back that much, well, maybe there's a couple different ways that it can pull back. Let's look at the biggest pullback that it's made. So we're like, well, obviously, if it's making more than this pullback, it's going to be more than our average counter trend move. Now, of course, in order to make that much of a pullback, it will have to have made this pullback, which we saw 1, 2, 3 times. I mean, debatably, we could see it in the opposite direction too. Like, is it not true that that's the same distance as the upwards move that we had there? And then when we go over here, we can see that we have even smaller move that we have been doing regularly. And the smaller it is, the more regular it can be. It's like, wow, okay, we've seen it many times inside of this range. Not even does it have to be a counter trend move of this of this trend, but like other trends have also respected that same size as well. And then we can see that same size also being used in our current trend. And I'm just like, well, of course, this must be considered. If there's 3 ways that we pull back, what is it to know about them? Did it take too much? No. At the end of the day, it's like now it's an understanding. And that's powerful because before it was a curiosity. Before it was a confusion, maybe, but now it's clarity. Now it's an understanding. Very interesting perspective. But that is one way you can look at it. And I mean, it's going sideways. I like to keep the brain fresh at all times. It is breaking the red yellow line and it is making a node here. Those are the facts of the situation. Right now, we broke both lines and retested them both. Like it's giving very symmetrical triangle like vibes, where basically we've made it even out of the top and the bottom. Of course, there's a little bit more value in like getting away with a break of the red yellow line than there is the top line. Like I mentioned before, it's that much harder to produce the same kind of thing that it did before. We'd be lucky to get half. We'd be lucky to get anything, to be honest. So at the end of the day, it's true that the major B point that we have down below insinuates that we're here only at a 127. And when we look up at the larger levels, we could actually be associated with the red yellow line by the end of the day. Now, is it true that we could come down from the 127 and actually hit that B point first and then go all the way up to the 188 200? That is an idea. It's an idea. And another idea is how terrible have we been at getting the B points? Do we have to make it all the way? Or could we run into something like this little crappy node and actually not hit it all the way? I'm like, yeah, we could do that. So like totally we need to be aware of that right there. And it's very important to understand. It's a danger. It's a risk. And we're in the business of analyzing the risk and understanding the risk. And once you understand it so well, you might even be able to capture it. And this realization, this path, this journey has been taken by the people that decided that the fund should be hedged, which is very interesting. I think that it was somebody's idea to hedge the fund And then they became so interested in hedging the fund that it became the hedge fund. And all of these realizations and all of these journeys and all of these moves, I would expect they would understand, or they wouldn't be in the position that they're in. Because there's a science to it. There's some basic understandings that need to be understood. Like, first of all, hedging is not about it's not about direction. It's about long-term and short-term time trades. Your core is always the long-term trade. Your hedge is always the short-term trade. If you focus on it like that, when they switch back and forth and your hedge becomes your core, you're not fumbling around thinking that you're supposed to be long or short in some which way, shape, or form. You always understand that the longer term trade, the one that's been there for the longest, is the core, and that's just the way that it is. When you refer to it like that, then you know exactly that the core is the longer term trade, and it is the trade that has more distance to it, and the hedge will be the trade that's contained within that one that was taken after that one, and that will always be the case. And that is a science. That is down to the science of it, and it must be understood. I would suspect, or they wouldn't be very good. So, and it's not very hard to understand. And as I say, I will explain it differently in every single day because I find opportunities every single day to find value in hedging. As I suspect they do too, because the market seems to tailor those that hedge. It's not the market doesn't just move for you know one person to get away with a few trades and then escape. Like, it moves all day for a reason. And it moves all day because people's positions are in play until the end of it. And that's obvious. But I also notice there's an inverse correlation again with the belief that the average person can have an impact on their position and have control in their position and actually, have some sort of plan that you can actually protect yourself from danger when you've actually completed part of the process. And um, it seems like when I look at many strategies out there, there's so much of that, like, hanging in the wind kind of idea where it's like, oh, I'm in a position, it could go either way, and if it goes against me, it's literally going to cost me money, and I can do nothing against that. And there's periods of the day where when I'm exposed, you can't do anything to protect yourself against danger. What if a war starts or something? And I'm like just completely exposed with everything you've ever worked for, hanging on the line, not even monitoring it or managing it because I guess people have told you so many times that you're not going to be able to or something. And I'm like, well, who's that good for? Don't believe them. It's crazy. Because it's like people will make an entire living off of trying to get you to buy into a fund and convince you that you don't need to watch it, that you don't need to do anything, you don't need to have any kind of input, and that they've got it for you. All you can just continue working while they've got it for you. I'm like, well, you know, the they could explain what they are going to do so that it could be part of your plan and you could do it, but it's not. I guess it's not. Doesn't cross the minds of many. This consolidation is coming to an end. What I can see, the volatility since we've ended the triangle has been increased drastically. The rate of change was very slow in here of the candle, like the idea that we don't make much movement in the candle. Now you can see that every single second almost we're getting a fluctuation. And those fluctuations in turn are slightly increased to what they have been. Not really reflected on the ATR, but this is an average, so the average should come back. Should see a little bit of a movement upwards in it soon. But whatever, fine. And what is that at? 5.2. That's a very low candle size. So every single candle is only 5 points as of now. A very precise retest of the red yellow line. Honestly, it's like it reminds me of how I would put like a blue and yellow line, to be honest. Like if anything, the one thing that that trend has not done is break properly. That is clear. As it progresses towards a level that, I mean, this level here is aching for a consolidation. If we could get one there, that would be beautiful. At the end of the day, how do we make it so that it's not overinflated by the time it gets there and has a negative response? That's a tough one. There is still time left though, so plenty of it. You know how high we've gotten, right? Let's take a look at some of these other charts because like I've got other things going on at these levels that could otherwise insinuate why we've been chilling for so long. Like this green zone, you know how I was just talking about the idea that we needed to go and chop like crazy at the green zone? Well, it's clear now why we're chopping at this one because it's totally a green zone. Now, what's funny about that is it leaping up to the other side of this range would totally look like getting to our other green zone. US 100, one of the older charts that I have, these lines are over 2 years old. They take a while to populate in because they are so old. In the event that, yeah, see, it takes a while to pop in. This is a really old range. Not much going on this chart in this area, but we just left an area that's otherwise really important. This range is like really old, and I'm like, okay, cool. Then we go very old white dash lines in there. Everything bought back up to them. I love to see, the pinnacle of the buying pretty much ending right at those levels. It's almost like they bought it up and bought it up. And that's what those levels are designed for, essentially. At this case, this is a bar that otherwise obstructed us in the past with absolute precision. Um, see what else we got. Owanda. Old. Haven't looked at them in a long time. Have a lot of short-term analysis going on at the bottom for them. Not a whole lot going up here. Check it out. Black Bull's very old. Like this goes back 2 years. Oh damn, no way we're in this place. This is crazy. Okay. It explains a lot. This is in a very intense range. When we were in this range before, you know how it worked? Is it was actually capable of moving from the red zone to the green zone. And that was the entire range here. Yet it was capable of moving in this area, and you can see that it kind of knocked on it like that. I really respect how it managed to move through this area, step on top of it, coast, run into that area, get on it on top, start turning things into support, start turning it into support, immediately chose to go up to the gold. Like this level, it's the pinnacle of the entire area. And it's old, very old. In the middle of a very yeah, I remember these. Many B points still left untested. Every gold dash line though is a level of interest also, and every red zone that has a green zone before it is subject to essentially getting it back to that side of the range. So it becomes an interesting environment where in the past this area was capable of making this point the middle. Where we've decided to step on seems to be very particularly that green zone. When we got into this, is it not true that we grinded? You know, we grinded and we respected it, responded to it, we stepped on it, we blew through it, and did the same thing to the next few levels. These are all old levels, but I see that they're all still respected. Do you remember when I was talking about this a moment ago and I said that we could end up coasting like this? This is just as difficult for people that are short. It may as well be because it's like literally knocking them out every single second that they try to get a position because anything that they've tried to do hasn't been as good as what it just did. So it's very interesting. Very interesting. That is a fact. You know, at the end of the day, why would it overlap everyone prior to uh, making that break. Now, I'll tell you one thing. We did manage to make it through the red yellow line finally. That is a change that is undeniably apparent. And you can't change that back. It's like torn paper. I mean, we can get back on top of the line, but it's going to be a fact that we did break it at some other point. And until we break the new trend, I mean, we're creating a new trend right now. Okay, so funny enough, when we were in this area here, this was the area that I said this. You can see that that's the original yellow line. When we were in this area right here, right? Right in there, right sitting on top of the orange lines. You see those orange lines? Now, when I enlarge this, see those same orange lines are in there. The idea is, remember, the focus is getting the gold bar above. A hedge target. The idea to keep the long trade from the inverse head and shoulders on the low and hedge against for AMD earnings at 415 today. Very interested in keeping the exposure because it may not hold through today's event, but tomorrow's Fed meeting midday. We could find another hedge for it, make even more on the exposure anyone chooses to keep from today. The objective is to keep the long exposure from the extreme. Finding a hedge with half the size of the core is a great idea for the upcoming events. I expect us to be through the red zone shortly. It never came back to that green zone. Never. Like, I don't know how much clearer I can be, but do you know that that was the plan of the hedge fund as well? Or whatever hedge fund is the most powerful in the Nasdaq index, period? Or maybe it was the plan of the Federal Reserve. I don't know, I don't care. They have a lot of money, whoever it is. And it was their plan, undeniably. Or else why did it make that move? Well, because of the random decision of the public? I don't think so. This is another chart though, like damn, look at the usage of that red and green zone. Run into it twice. Came back to step on top of it. Where'd it go to? The red zone. But it chose to make what looks like the same spike out of the bottom that it did the top. Came back to respect the levels that it were otherwise presented as resistance. Now they've turned to support. Same thing happened with the red zone, except we've done more out of the top than we have out of the bottom. It's interesting to me to see phase A come to an end so soon. Is it not true that this is phase A in a Wyckoff? And one thing that we notice with phase A is it is incredibly accurate. And phase B, as I say, could be boring or brutal. You know what? It could also be bad. Might not even form. Like it's a bad apple kind of thing. At the end of the day, this I'm like, or am I crazy? You know, it's like at the end of the day, we've got this circle, we've got the up circle, up, and then the down, and then the up, and then the down and the up. It's the same thing, as far as I'm concerned. You know, and you know what's funny about that though is it didn't do this bit after the N. What does it do? Phase A ends with an N. What does it do? It goes down. It didn't do that here. Undeniably, it did not do that. Like, not even for a second did it think about it. It went sideways and went up. So it's like, well, phase A was incredibly accurate up until the point of the N ending, and phase B was bad this time. One way to remember it. And we'll build on it every day, right? Because it can be bad at phase B. It could be completely bogus. You know, it's another way to look at it. But you know, whether you love it or hate it, you'll remember it. That's the key. That's the point. Or everybody, it's all a waste of time if we don't, right? So at the end of the day, that's key. Is it not true that we've returned back to the blue and white line finally? The B points have all been hit on the shortest term. The 261 returned too many times, but obviously the major B point is still untested. That would require us getting through the blue and white line. Of course, these little B points here have been readjusted to the new high, and they are, as a matter of fact, B points themselves, and they are untested. They are allowed to be tested. But one thing that really stands out to me is actually this yellow line. Is it not true that that yellow line has done anything? It's been terrible, really. And I mean, it's been used more like a blue line than anything. You can see the short term, these levels are getting hit. I don't care about them personally, but you might at the end of the day. And I certainly have in the past. Don't get me wrong, but they're not necessarily the safest moves in the world. After all, the move that we just did out of the bottom could be presented on the top of the range in a moment, contrary to popular belief. An audacity line might seem too steep for some, but it's trying to get away from the people. But watch institutional buying pressure. It's interesting to me. The 5 wave move. I mean, like, and I'm like, where are the waves here, everybody? Like, how many waves are there? Like, when I'm like, where is this pattern? It's almost like, are you joking? Like, is it here, or is it here, or does it start down here? How many times has it done this in different weird ways? Where are we in that sequence right now? Or did we do it up here? Or when is this one still in play? I mean, like, obviously not. I mean, at the end of the day, it's clearly blown through the top of how many of these patterns so far, or we've lost count. A quick glance, you can't even say because there's too many. When it becomes the case that it is so obvious that that is the case, that that's the fact, that we can't even count at a quick glance how many times it's failed this pattern, it becomes a way of this trend. Now, of course, when we relinquish that trend, how many 5 wave moves have we have we seen since we've broken the red yellow line? I mean, it's a genuine question, but none. I don't think any. We've done this, expanded out of the sides of our symmetrical triangle, and made this like sort of bow tie like environment where we've seen this before many times. Expanding into an expanding triangle, having come into a symmetrical triangle. Honestly, it's one of my least favorite things to do because it's really counterproductive. It's like, would you rather move like that or like anything else in the day? I'm like, well, I pick any other point of the day. It's better than what it's been doing in here. That's just the way I look at it. But you know what the great thing about this area is it's always come to an end in the past, or we'd still be doing it from before. But we're not because it ended. So as it did those, because you know how many times it's done this move? Like probably like I don't even. I want to say like as I say like 100,000, maybe a million times, maybe more. They've all come to an end, just like every trend, just like every trend that was this steep, just like every rising wedge, just like every symmetrical triangle. It's all come to an end. They've all fulfilled their purposes, I suppose you could say, to get us to where we are now. And I'm like, well, hold on. Let's readjust this a tad. What are we doing here with this? Is it deja vu to what we were doing with this move in the morning? Like let me just put some emphasis on this here. Like when we went like that and like tried to do this out of the bottom of that purple triangle. It's like I see this purple triangle going the opposite direction. It's doing the same thing. It's going top and bottom, both sides, pointing in the wrong direction though, isn't it? So, you know how we've come up on failed rising wedges? Oh, unless you consider that working. But I mean, what retracement did it make? And I mean, are you going for that? Like a 23 or something? It's like, no, 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 no. Can't be. Must be just a counter trend move. Must be that the way that we trend in this trend is to make rising wedges and make a counter trend move after. Because no rising wedge has made more than anything but a counter trend move. But now with the trend break, we're doing rising wedges in the opposite direction. And that's true. The first thing that we did since we broke the trend, wow, is make this purple triangle, and it is not pointing up, it's pointing down. And I mean, like, that is a difference. We could either accept it or neglect it, right? And I'm like, well, I didn't make it up. It's true. Unless it's not a rising wedge. Maybe the argument's like, well, it's not making a triangle at all. Well, I'm like, okay, fine. It's in a channel then. And it's going down. That's a fact. We're contained within the downtrend, and it's contained within these levels. Maybe the falling wedge has lost its impact. But what was the result of the rising wedges? Was it to impact it negatively like it usually would on Google? No, it was to fail upwards. Now, what if this is true to fail downwards? Because its design is to send it up. But after seeing so many of its counterparts fail, does it want to be treated the same way? Part of me actually thinks it's going to go for the downtrend break again, which is like what the audacity after breaking through the red yellow line and everything. We're going to go for this small crappy downtrend. Beware of it. It's a point where hedges must be managed, and like I said about the B points earlier, what if we don't get it there, get all the way there? Make sure it's safe, because at the end of the day, um, there's no use losing money on a hedge trade when you have the option and the flexibility to maintain and to manage some profit off to pay yourself at times like these. You might find value in it. Now, of course, there's never been a bigger risk than to break the red yellow line than ever before. Now we are at a blue and white line. Now, what have the blue lines done for us all day today? Do you remember what happened with this original blue line where we were cutting through? And it started from a rising wedge, right? And we were using it, and it, like, oh my goodness, like, stuck to it. How many times did it touch it? Anybody see? I mean, like, I can't even tell you. Even with 10 seconds to count, I don't even think I could tell you. Not that it matters exactly, but it tested it a lot, is my point. And at the end of the day, um, it had the audacity to leave it alone. We've managed to get the B point now too. So if any orders for any hedges were placed on the B point, you should be getting filled now. If not, you want to make sure that that's the case. Making it safe prior doesn't mean that you have to relinquish your ability to take profit at other future levels or your exposure to the downside. Now, of course, that blue line that I was just talking about, it does exist still. And in time, we will see it again. Whether it's going to be soon or not is the question. Like, one of the 3 B points have now been hit. And this is what I mentioned when we were in this area up here, right? Like, I'm like, okay, at the end of the day, if you find an opportunity to hedge using less than half the size of your long, oh, cut that off, is key. And these B points that are set here, obviously there was still 20 minutes from that point, but you could see the risk in the red yellow line providing a break that could get us to those B points. And as I said, everything above this point when we were there is literally going to be taken back on the break of the trend. It's not easy though. I mean, and it certainly wasn't a specific fib that was the culprit, but a consolidation that could be said to have affected momentum negatively. Throughout the course of that consolidation, the bleeding of momentum into the trend break allowed for the continuation to the B points. Now, of course, that momentum is reaching an extreme and could start to see the same thing that caught us from this point here, the red zone, the high, and now we're at the bottom. Now, check this out. The 15-minute is still way at the top, way at the top. So coming back up is not as hard as it would seem. Actually attacking the this blue line, I'll make a blue line here, make it like dark blue, is normal. And I'm like, yeah, you know, I could take this off here, but it's it's going to become relevant again in the future. When we're up at these levels and stuff, people will start looking at this level. They'll start being like, all right, what are we going to do uh, up here? I think we're going to get another grind. I think it's going to grind like crazy up there. You know, honestly, I showed a move earlier in the day twice, and I'm getting deja vu with it again. Tell me it doesn't remind you of this. Like we had the other day, like in that environment, what did we do? We came out of this chop, right? It was like a chop, and then we bursted out of it, right? And it was on top of a red yellow line. It was like the audacity to go up through this stupid yellow line like it did here, right? And then the yellow line won. It was like, yeah, no, it doesn't matter. There's a huge red yellow line there. We break it, we go up hard, and then when we stop, we go sideways like crazy. And then what did we do? We dropped all the way back down to those B points that are like right there, exactly like how we did right now. And what's that line right there? Is it a blue line? And I mean, we have the blue and white line right there. It's only so important. So I'm like, well, it's got so much in common. I cannot believe how much in common it has with that environment. What's it going to change about it becomes the question. Every seller is about to be made into a buyer from what I can see, and that's what that was about. You know, in this case, I'm like, all right, is another thing the same? If I take a consolidation or a VWAP from this consolidation, are we here? Huh. Not the same exactly, but it is there. Interesting. The red yellow line is still far away. Could we provide another secondary low there? I mean, after all, where do we come back to? We came back to test the poor people at the 188-200 that never got any kind of downwards movement. Because the 188-200 is designed to go to this level down here. And that level down there is that all the way down there, right? And I mean, when did we test that B point? Because I don't see ever testing that B point, right? So is it still in play? You know, did we just do wicks and spikes on top of this 261? After all, did you know that we could come up and make a giant M and then come back down to it if we wanted to? Is it not true that when we move back up through this red yellow line, that we will have the ability to draw a new trend? Just take some of this off for a second. A new trend here. Is it not true that that trend will exist now? Or it already does, man. It's there. 100%. Like everything about that is already there. Already exists. It's a fact that now we are contained within that trend, and until it breaks, we are in an uptrend, and that is it. And funny enough, the downtrend that we're breaking right now solidifies the fact that, hey, this is the new trend. There's no more breaking this red yellow line here because it's already broken. Just like the last one that we broke. Yeah, it's good for retesting and stuff. It's not like it disappears. It's still there, but it's not as it's like a fired arrow now. You know what I mean? It's like it's left the I don't know how to put that, but it's not the same. It's like we can get back beneath the line, but it won't be like it's never broken. You know, it's like it's already fact that we've seen how it can break. And if it breaks from the same level, it will be a break from that level having already broken at that level. That's the truth of it though. I can't argue it. At the end of the day, the 61 of this dip is intriguing. We push past it, we come back to it. This line right here, no stops are safe above it. It wants to come back to it. As insignificant as it may seem, at least it is an understanding. For the moment that it is doing this, we have the control of understanding that this is what it's supposed to do. And we will not position ourselves to get affected negatively while it's doing something that it's supposed to do, right? So that makes sense, right? And it's very black and white, very old fashioned, very the way you would expect it to be done by the people that do it the way it should be done. And I can see every day that it's not my way. It's like whether or not I play ball with them. At the end of the day, it's about calculating their moves, and they create the changes far as I can see. They create the biggest changes, and they're typically in favor of their accumulations. If you can find out where their accumulations are and how they're willing to change the market, how they're willing to edge the public into making moves that are favorable for their accumulated positions, it's huge. And I can't prove for 2 seconds that they even exist. You know, maybe it is the composite man sitting behind the scenes manipulating the stocks to our disadvantage if we don't understand the game as he plays it. But that's hard to believe. You know, like seriously, it is. I don't think there's some crazy, dude sitting behind a computer like the Matrix or something like that, just screwing everybody over every second of the day. Because if it was, then how old would they be if Wyckoff knew about them? So that's the idea. Obviously, it's not the case, but the institutions are the entities that live on from those times. If anything, if any information is to be considered, it's the people do pass on, and so does their information, and the institutions they stick around. They make sure that the people that they bring on are going to be as capable as the people that they just let off. Because people they as much as we love them, they only last like 100 years if you're lucky. Good luck working at the firm till that point. That's not likely. You got to find new people, and they got to be competent, because it's not like those positions are going anywhere. But like I said, I can't prove it. Like maybe they don't exist at all. But I see the footprints going into the market and making the moves that it makes every single day, and it just makes it clearer and clearer that there is an entity that respects technical analysis, that does follow rules, that does have expectations, that does keep constant control of the market. And that's what's interesting to me. And not all moves are interesting, of course. And not all moves should be. At the end of the day, we go in these sideways movements. They all lead to some of the best environments we've ever seen. They've all come out of sideways movements, every single one of them. Is this a sorry attempt at making a head and shoulders to an inverse? Looks like it to me, though. Right. So, like it made this kind of an attempt. And it's not perfect. It's definitely not. It's far from perfect. But damn, if I ever move it over like that, is it not true that like everything crosses this middle point more than it does anything else while it's doing this? And is it not true that everything that it does outside of that middle point comes back to it as quickly as it left it? Maybe not as even as it is on both sides, but does it matter if it all comes back to the same point anyways? If it does do that and we're aware that this is what it does while it's doing this, making sure that we don't obstruct it from doing that thing is very important. So it's like that's not a hard thing though. It's like a cautionary I don't know how you would call that. What would you call that? You'd call that like a warning, I guess you could say. Simply put, it doesn't have to be more complicated than that either. But it's clear that until it's finished this process, it is in the act of consolidating. And I think that making a head and shoulders, like everybody knows this is a reversal pattern. And one key component to this pattern that I didn't draw in there that is missing from so many of the examples is this. Because it's not meant to be traded like that. Because one of them takes the uptrend that there is and reverses it down. Then the other one takes the downtrend and continues it down. One of them, continuation, the other one, a reversal. There's two different types of patterns. This is meant to be a reversal pattern. It doesn't mean that it can't continue either. It's just like, don't be surprised if you lose money if you have expectations that it does continue. It's very rare that it does do it the other way around. And it doesn't mean that it can't be spammed at us for over a month straight to show that, hey, head and shoulders can be continuation patterns. But on the whole, if you look back over the history of time, they're not. They're reversal patterns. And they're intended to have the most impact like that. And I would question anytime that they're used as a continuation pattern, the longevity of whatever they've chosen to continue. Because if they're continuing a trend when they're designed to reverse it, how good and solid is that continuation going to be? I would really look carefully. It better be something telling you that it's also going to keep going. But that pattern alone, no. Like, this pattern right here, right? Okay, I'm going to talk about something here real quick. It's true that from the high, like to where we are right now, it's 18 points off the top, right? When it was at its best, it was 37 points off the top, right? Okay, let's just go somewhere real quick here. Like, just for 2 seconds, we're going to look at this. And from that very, very, very bottom to where we are right now, it's over 1,058 points. So remember, when I said that, we've come off 37 points of that 1,058. Do you think that the inverse head and shoulders is an effective continuation pattern? 1,058 points above the ground. And what is going to happen to whatever it decides to continue? Personally, even for what it does continue, I find that when it does make a retracement, they will be sure to come back to anybody that's associated with this pattern. Because it will expect the people that continue holding to actually hold from a better spot than where we are now, and it's likely that the spot will be more overlapped in the future, and it is somewhat centralized in the nodes, so I question its ability to play out. And it's true that a moment ago we had a different red yellow line. It was at the different lows here, and essentially we readjusted again. So not only the first time, which this was the first one, just for some perspective, but then it moved over, you know, and that's where we had it. Whoops, and that's where we had it, and it was working with it for quite some time, and we relinquished that line, right? Now, since we made that move, there's been no 5 wave moves that have come back to the fourth, and things have been debatably different than how they were when we were in that last trend. So now, are we more interested in breaking the red-yellow line in different ways? I can see that we came back down to just hit the V point, and that was just to get the 188-200 as well. I believe it was from here. Let me check this one out actually, because that one was actually played out before. No, 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 no. That one really provides a very interesting perspective because the way that I remembered it, um, there was a 188. Let's flip that. Sorry for 2 seconds. I'm just taking a look here. Yeah, it's so interesting. That 261 there. Look at how it responded when we first hit it. Isn't that interesting that when we came back, we came down to that 261? So, in theory, is it not true that everyone that shorted that 261 is still trapped? Or was this a trap for the people of the 261? And did it work? Is the question. Is this going to be something that we're going to see more often? Now, I tell you one thing. We see it pretty often. At the end of the day, this B point right here, this 261, we ended up having a negative response to it somewhat originally, but we didn't really come back down to test it from the other side. Where we have the VWAP is at that level. The break of the trend has happened again. We have another VWAP in here, so that's basically telling us the amount of volume, or sorry, the average price that since this point, essentially.
my man.
Oh shit, yeah, thank you, man. The idea that, like, I was talking about how we saw this earlier, and I was like, well, this is the idea that we were similar to this environment. You notice how it came all the way down and it hit those B points, and then it decided to break the trends, and it broke those trends, and it worked out really well. It essentially erased that entire move. But in this case, it came down to a secondary low, and I just noticed that it was a 61 there. I was like, wow, okay. So I put it on here again. I was like, wow, okay, it actually was a 61 in here too. Same thing, same environment, same people must be controlling the market. Same people must be impacting the market. Like the market is undeniably making the same moves. So it's intriguing, and it's time where it was after a prolonged sideways movement that you could expect was like not stimulating for most of the public. So like a lot of them weren't likely part of the major move, and for it to be very precise and not all the way to all of the B points, but to the major one, to move on to break the trend right after, exactly from the 61. And all of those things are the same about this environment here. And that environment right there was the one that we went over before, and I was like, oh, I see that it's very similar to what we did here. We came down to that level, and it sniped those B points and then rallied. And I'm like, wow, deja vu. It just came down, sniped this B point, and then did the whole thing again. But essentially, when it did that, is it not true that there was some B points left up top here and some B points left here, and it managed to get them? What's interesting about that is if I remove some of these lines, so we're just, but here, the 61 was used, right? So you can see that it went from a 61 to a 61. Essentially, if I just quickly put those fibs back on, that 61 right there, we can all see is part of this movement right here. And if I make that like that, you can see that that 61 right there was the low that we had here. And basically, when we analyze this move now, so we did this one and determined that that was a 61, right? So we'll take that off. Now we've done this one from the high, and it was a 61. It did the 61 too. So I'm like, wow, okay. So that's very, very much a 61 to a 61, undeniably. This 61 led to this 61. And I mean, one thing that's interesting, okay, it does plot a lot of lines on there, but we're only looking at this one. The fact that I've connected this bottom to this top, it gives us all these levels, which the 61 was used. And then when we look at these ones, I've clicked from the high to the low, and that gives us all of these levels where it went to the 61. And then I'm like, well, okay, what did it do after that? You want to know what's funny? Is it went more than the 61. Because this next move that we made here managed to come down to what? A 78? An 88? 78 probably. Let's take a look. 78. A little bit past the 78. And now in that move, we can see that we've made an M into a W. The M was cleared. The W is now something of an interest, but it's tiny. And one thing that I can see in the situation that we have now is the downtrend that we had there. Like, do you remember how we had a falling wedge right here, and it spiked out of the bottom and then the top? Like, let me draw another one on here again and show how it spiked out of the bottom and the top. Suspiciously particular, I'd say. Suspiciously. Why so precise? And the movement that it made back, uh, it nearly doubled its existence. Which, I mean, give it a break a little bit. It did a good job at doubling, in my opinion. I think it's pretty much what it tried to do over here. Now, of course, that's a really small short-term time frame. We can be a little bit lenient with it because it's hard to control the spread. So it's like at the end of the day, when it's hard to control the fact that, hey, if it makes a little bit of a wick out of the bottom, now do we have to compensate by making that wick the same size out of the top? Or what if it's not enough to hit, given B points? Do we make a little bit more? And what can that relate? So at the end of the day, one thing that I can see is that this line right here, the blue line that I made a little bit darker because I said it was important, we've come back to many times. At the end of the day, we've left it now to come back to the red yellow line. We could say that the red yellow line, it's the trend that's the largest trend from the very beginning of this entire push out of the front, well, of the day. I mean, we've got trends that go back, but recently we've placed this trend in, and it cares about it. It's using it. It's tested it 3 times now. It's also broken previous trends of its same caliber and treated it in the same way. And we can see that the past few trend breaks have done something of a similar sort. This one, ironically, did not have the juice to get all the way back to the original retest. But funny enough, ones in the past that we've done here and here, they were able to do it. You can see that before that point, it's not really viable to keep considering these ones because it was just mere chop. And that's a that's a similar situation to what we were in before we did this. Now, like, hold on. Remember, I was just going over this here, right? You know how we came down and hit that B point? Well, this is what it looked like before. The red yellow lines were placed completely differently. It was intentioned that we break those lines and basically the B points below, or the only way we can get those are to have that those lines break. Now, with it being a fake break in a short squeeze environment, we know that getting those targets can be quick and sharp and brutal and fast, and maybe it might not even get all the way there. So you have to be aggressive with your ability to protect it. You might even take less size and so on because of it. But it's no reason to get rid of any long trade. You know, at the end of the day, as soon as it did get down, where did the red yellow lines get positioned? After all, we were miles off, but I still knew that that line was in need of breaking. And at the end of the day, like looking for a continuation through the gold bar for any positions made at today's low is what I'm looking for. That's what I had to say about it when it got to that B point. There was no risk of it continuing going down, in my opinion. So that's the idea. Whereas everybody else is confused with it, and it's like, well, it doesn't have to be that way. And the thing is next time that situation is presented, it may be different, and I will look at it differently. It's just a matter of how the components of that situation align, and it determines how well I can fit into the situation. And in this case right here, I can see that everything that we've done above that B point so far, it undeniably, like M and W so far has been formed. And it's very intriguing when we get this kind of movement here. It's like, can we get it here as well? I'm wondering. I'm wondering. Because I mean, so far, does it look like we're moving like that? I mean, so far they're doing a pretty good job. Pretty good job. But it's harder, undeniably. Harder. And the white and blue line does provide a little bit of a risk back down to the other highs that it's just passed is okay. Testing the POC is also okay. I mean, that's the same thing, so no stops are to be dragged above it. Of course, as we pass levels like that, they become B points, just like these ones did down here as there were W's and so on like that. So it doesn't mean that they have to get hit, but it means that the next time you take a hedge trade, you should be considering profit targets on those levels, or at least targeting those levels. Of course, you understand that hedges are to be made with the idea that they're not to be trades that last forever. They're protective measures taken against your position that you intend to hold for a prolonged period of time, protecting against any kind of downturns along the way, as an insurance policy, you could say. Yeah. You know, I was looking at that head and shoulders earlier too, and I was like, hey, we did try to make I called it a sorry attempt at a head and shoulders to an inverse head and shoulders, and this is how it ended up working. It ended up going down like that. It didn't go past the head, ironically. How it leapt up was by making a W, quickly testing it, and rallying forward. Now, is the advancement out of the range as significant as the most recent one that we've done? Because that would be make like a lot of sense, you know, like a lot of sense. So let's eye on this one. Back to the blue and white line from the up top is absolutely okay as well. As I said, anytime, we could come back to these levels. So just like before, is it safe to drag your stops above those levels? And it does it matter that it comes back 61% of the way? So it's like, your 1,000 will turn into 400 for every 1,000 you have. Can you stomach that though? What's the best way to do it? Well, to make money off of its formulation. And the distance that we have in the middle, I haven't identified it because I'm trying to show you guys in a different way. But it's literally like that as of now. Could it be that we make the entire move out of it? After all, there's a way that we can calculate the progression. We can see that we've done more than double, almost 241% of the entire move. And I'm just curious for 2 seconds here, what what this looks like from the other side. So I have an idea. Did you know that this move here, it started at the 300, but the real consolidation happened between the 300 and 361. Okay, let's just remember that for a second. Because, where is that going to be over here? And you know how even it likes to be on tops and bottoms of consolidations? And it's so interesting to me because all they have to do is turn it onto an angle and nobody will notice. At the end of the day, if it's very, very clear that it likes to be very, very even. And as of now, this portion, which is ironically the same size as the portion that we have here, is causing it a lot of trouble. Now, ironically, this is a 200 and 188. It can lead to the 261. You know how I usually put these in? I haven't done it in a while, but I'll do it again. And that's by making this green and making this red and making this gray. But it's a different gray zone because it's not the 341 to 361. It's the 300 to the 361. It doesn't need to be blinding. So of course, anybody that dragged their stops above the B points has now been put in a very tough position. And of course, it doesn't make sense to drag your stop within a path of a bearish pattern to play out. Especially if it's like a little pattern, a little move. Any hedges that were taken obviously can be profitable at this point. So it's like there is some equality to what it's trying to do here. You can see that it responded negatively to doubling. We can also put fibs on here. It looks like it went to the 188 200, which is fine. But at the end of the day, I do see it trying to get through it. And what we made right now was a little bit of a spike on the top of this node. If we look at the node altogether, for all of the value area is what it's actually called. I've decreased the value area from 75 to 60, so it shows 60% of all of the volume on the screen as a different color, and that right there is an interesting range to me because what we've done, and I'll turn this down a little bit so not so blinding again, but the what we've done is we've managed to make everything wicks and spikes out of both sides of that level. I can't help but notice that when we made this spike, it did something a little bit different to what it would usually do. Now it produced the same spike, it really does look like the same kind of spike, but it wasn't just separated by our average sideways consolidation. It wasn't just separated by a circle as I would usually draw it, ironically. And that is how it would usually go down, right? It would usually make that move, and we've seen that a lot lately. You can even kind of see it in here when it made it in there, and it did it correctly here. I would say so. I would say that's pretty. I mean, how is it supposed to be if it's not supposed to be like that? So it's okay. Not exactly the same sizes on both sides, and that's okay as well. But in this case, what is very interesting to me is the fact that it does have equal sizes, that it is showing us that it is related. The bottom isn't the same as the top, but the size that it decided to make is undeniably off of the same level. You could say that this is one way that we have honestly managed to make this movement today. Is that not strange? Because it's true that it started from here. It's true that it went down there first. True that the next major move was up. But you know how they did that upwards movement? In a really, really weird way. Like that. Like that's the upwards movement part. And I mean, yeah, in the sequence that from the bottom of this sequence, after we were done going down from the bottom, there was no move since that low that made an even lower low. It was straight up the journey that brought us to this point. And from that point, it was then the journey back to the equilibrium. And we can see that happening on here as well. And that idea that we have essentially returned back to this equilibrium and put the same amount of movement on either side of the POC, really. And that's the heaviest volume node that there is on the chart right now. And basically, like, I can take off these levels just to leave these ones in there now too, because they do a good job at showing us exactly where the 188 200 is, where the 261 is, and in this case where the 300 to 361 is. And they're all related to exactly how much it's moved out of the range before, and so on. But one thing that is true about this environment that we can see is that we have a B point that has been hit every single time. That well, it's not been hit, but it's been went for. That has been the cause for the trend break. And the biggest moves that there have been counter trends have been ones that have went for B points, is what I'm trying to say. And that's basically really, really important. Because, okay, God forbid we don't see a B point, or we don't understand that one is in need of hitting. Maybe we drag our stop in its path of getting hit, and then we lose our position. So it's not good. At the end of the day, it also provides targets for any hedges that have been acquired at any time, at any high, at any resistance barrier that could present a value. Like, for instance, first off, the need to come back to test that white and blue dash line was very apparent as we passed this level. Others may have seen the 188 200, but the need to get back to that line was pretty clear in my opinion. One thing that I can see that we have done is actually made this distance on the bottom, like we've done a really good job at obstructing ourselves from being able to go any farther so far. I mean, one thing that I can see that is aiding in that is the fact that this level has had more volume than any other level, and effectively, it is just one more time that the people that decided to buy at that level or sell at that level have to be wrong yet again. Ironically, it's true. Because anybody that trades at that level gets overlapped the most, has been overlapped the most. And, to find value at that level is tough on any position. Because if it is the level that gets overlapped the most, is it not a better target than a place to get your position from? Because is it not true that from this point it can stray away the most? Like having not moved away from the area that it's found most centralized, it's really hard to say, like, hey, are we not getting better at leaving this area? And could that tell us that because it started out with a little bit of a range, you know how hard it was to get off this level? It was terrible. It was really hard. Because of this node right here, we've got most of this volume. Like, and now how much volume do we have to spend somewhere else in order to actually make this different? Do we have to be interested in another node from a different time again? You know, what's capable of of being found valuable again? Like our last node here is nowhere near the size of our current node. It's true that the volatility is increasing around the time of day that we've typically seen an increase in ATR. I did mention when we were at 5 that we would get an increase in volatility, and it is true that the volatility itself has been going up and down. No, well, not the volatility, but the size of the candlesticks, um, and the volatility, I suppose, with them has been going up and down. Because when we were in this area where it was barely moving, that was 5 points average size of the candle. Terrible. Now it's a little bit better. A little bit better. It's trying to be 7 instead of 5, basically. And for when it's moving good, it can be good as 7. Maybe even a little bit better as we get closer to the end of the day. But the red yellow line that I had on there originally, it reminds me of a line that we used before. I must have taken it off actually, but that's okay. It's like this blue line at the beginning of the day, where we've basically been testing it and testing it and testing it. Nothing really has come of it, but we've managed to make it relatively even on both sides. Still, the need to test it relatively high. Everything we've ever done away from that POC is returned back to it. And the thing is as well, okay, it's a fact that everything we've done since we made contact with this price level has come back to this price level since we've started involvement with this price level, right? So another thing that's interesting is that's a fact, but I have a belief that we are closer to the end of the consolidation than the beginning. And what does the end of the consolidation mean? The end of the consolidation means no more of this level. That's what that means, because as long as we're using this level, we are consolidating. This is the level that has to end in order for us to be out of the consolidation. Now I can end the consolidation by going up or by going down, but ending it is the primary thing. Now, of course, we can get fake outs closer to the end of the consolidation. Now let's look at what's been happening to the volume since it started. Well, we went over it was tighter at the beginning, and then it got more familiar with being able to move outside of that volume area. We were actually able to start putting volume farther away from the POC than ever before. But what we chose to do was make all of that volume back into spikes. Like, look at this move. Is it not true that it came back as quickly as it left? Why did this move do the same thing? And then the next move, same thing. And then we tried it from the upside and it did the same thing. And then we just did it again. I think it's trying to show that it likes this level, obviously. So, at the end of the day, I believe a relationship with this level is coming to an end. So that means that over the course of the next few moves, one of them will take us away. So assuming that it's going to continue doing this is risky. And it's showed us that this is clearly like what it does while it's here. And if it's close to stopping, well, we better be careful, assuming it's going to stay at this level for long. One of the next few moves is likely to move away from the consolidation entirely. And could it be like an actual move that is destined to stay away from the consolidation? Like many of the consolidations we've had in the past, what they have to pick from? They have this one that can go into a move here, back to the test of these triangles, and it's really common when we do W's to get that, right? And I'm like, well, okay, let's say for instance we don't have a W and it does that. It's fine at the end of the day. That's absolutely fine. Doesn't matter. But when we do this and go up, that means that anybody that's going for those B points are trying to get that 78% retracement or that such a common average pullback is just not able to get that. And you want to know what's funny is you can see that this environment here will always begin first, and it'll always show everyone, hey, we're retesting, we're retesting, we're retesting, and then finally, um, as people don't even realize because it's so busy pulling back so much, it's actually in an uptrend now. Like it's actually in um, an uptrend. And as it continues, like let's say it gets up to here, right? And and number like 7 or whatever, as it continues going up, we might not do that anymore. What we might do is actually decide to forget the pullback and just go up. And you would think, well, wouldn't it be easier for it to come down being higher? And no, it's actually contrary to popular belief. When you see a large move in that entire day, there's usually less of it left than there is um, in many cases on the short term at least. But when I see that this is the case, and we've managed to take an environment where it's full of pullbacks and start pulling back less, let's look at today. Like, look at how it started. It was like this. It popped up, pulled back. How much? So much. How much did it pull back next time? So much. How much did it pull back the next time? Even more. And then again. And then what happened here? Went sideways. Like a little bit less of a pullback. Oh my goodness. And then what happened here? Why is it like no pullback all of a sudden? It's able to go up now? And then it's like, where's the pullback here? I thought we were so good at pulling back when we were low. Where is it happening? I don't see any of that going on here. And then all of a sudden we don't pull back at all until we're just like up and sideways. Now we can't even hit B points properly. And it's like, this is the kind of environment where people get squeezed. People short it because they think it's high because it's been up a few days, and they lose their accounts on moves like that. So it's normal, and it's good to understand that danger because at the end of the day, it's because this line right here, and I'm just showing where it started from, right here, the red yellow line. That's the high that we made on the daily. This is the daily chart. So every candle's 1 day, and effectively we made it back up to what I have as a red zone. Like this entire area up here is effectively a red zone. It can be used as a range, as you can see there. So I've got it as a green zone and red zone up there. But on the whole, that is the red zone to this green zone, which can also be used as a range itself, not as well as the one up top, clearly. But at the end of the day, we've got a line up here. Now it's coming from the red zone, coming from the daily highs. Now, when we break through that trend, that means that every part of the daily downtrend that's gotten us down will be broken. That line's right there. Oh. No, I want to point out one thing. The high of this range is here. You know that everything we've done above this point has only been this volume here. Only been this movement right here. According to today. The last time that we were here was quite some time ago. And the last time that we managed to make a large range here, this insinuates that we could be interested in making some large moves. How much has been our average major upwards move? And is it the same size as the range above? Because it looks very similar. Could be. Could be. After all, it's familiarizing itself with being able to traverse the same sort of ground as that is insinuating that we're capable of making. And in this case, I think that these major moves, they're very capable of showing that we're more than able to use that range, more than able to make moves capable of being in that range. And a consolidation on that green zone could be huge. Because when we fall back from the red zone, something to sit on top of is good. And what that could look like is a break of the downtrend and a retest of it. You have to watch out for that. It might happen from a little bit of a later time too. Of course, there's not much time left in the day, and time for a move like that, I wouldn't think so. So we have to be careful. This smaller possibility, I would say. The end of the day is here. It is true that there is some time, but getting to the grind phase, I think, is what's important. Making the pop overnight could be on the table. The question also becomes, is the first response going to be a negative one? Well, if it's to start a grind, one of the things that we could see is a grind, like a negative response, and then a grind inside of that negative response. Something like that is incredibly normal. Now, just keep in mind that this was an area of equal distance on the other side of this level. And, all it could mean is that too. That is an idea. Yes, it will have been this move created out of the other side. But does it have to come all the way back to the blue bar? I would say every moment that it goes on, it becomes more difficult to associate with that blue bar. Associate with that blue bar tomorrow, you know how far down we will have to be? It's possible, but even for the close, if we're to be there for the close, it would be here. Almost 100 points down to be associated with that blue bar. So it becomes less and less realistic to be able to get to. But levels like the horizontal B points can be hit at later times, as they don't really they don't get more difficult to hit every day that it goes on. Curious about AMD now too, because like they kind of started it all. Not gonna lie, like there's no better position really to be in than to have assumed that AMD was going to continue to go higher. And like where we're going right now on their daily is right up into that target zone that I outlined on the at the beginning. I mean, we're right up in there. We're testing that blue line right there. We effectively made everything even on both sides. Three consecutive lows that you can see here effectively made this pattern. That pattern. Or maybe it's I'm lucky. I don't know. Definitely intention. But at the end of the day, it has a very similar movement style to the Nasdaq, of course. Nasdaq I know in and out. So the most out of any other index it's worth in if you're gonna capture the moves to anything, capturing the moves to something that moves the most is what you would choose. So I'm like, well, in the event that you consider what the institutions are trading and what they have to find interest in, what do you think they're gonna hedge with? You know, Nasdaq index. At the end of the day, the slow SPY may not cut it. Let's take a look at it. Sometimes it forgets how to make candlesticks properly. And then it can remember sometimes, but then it starts to barcode again. Unattractive, low volatility environment that does not provide opportunities. People do it because everybody else is doing it. That's all I see. Which means no control. And nothing I do is because everybody else is doing it, that's for sure. If anything, it's contrary to what everyone else is doing. And I like to keep it that way. But what's interesting as well, as I mentioned, why is it that we get from the green bar to the red bar? Why is it that that's even a thing? Well, it's true that the green bar did lead to the red bar. Now, the green bar and the red bar are both coming down infinitely. That will never change about them. They never disappear. Just because they end there doesn't mean they're not going to be important. But they are related to each other. I've noticed in the past that they can gyrate between each other. Not always do they have to be so steep. And they're pretty steep, which means it's easier for them to test from underneath. It's harder for them to test above. Let's see what it can show us. At the end of the day, whatever it does at the green zone ain't going to be for too long. Also, it's got the 61 down there too, which I'm like, it's shown us how much it likes the 61 earlier, but it forgot quickly about it to do other levels after, like immediately after it did the 61 to 61. I think it was in this environment here. Yeah, no, this was a 61 here to this move, and then this was a 61 here to this move, and then it's like no more 61s at all. Anybody that tries a 61 is destined to lose money. It doesn't matter how much it worked here and there. It completely forgot about 61s again. Doesn't mean it will never work again in the future, but no, having made it fail a few times, it's due to work again. We also have 5 waves here. As much as it's not a 5-wave Elliott wave, it is true that within the components that I can see here, there are 5. 5 trend breaks, 5 trends, 5 sequences that involve this movement breaking to come down, that movement breaking to go up, that movement breaking, and so on, so forth. Go ahead and remove some of the other analysis there if there's no likelihood of it getting used again. I wouldn't say no likelihood, but less. At the end of the day, one thing that we are still interested in is that POC, as everything that ever has left it has been destined to come back to it relatively the same speed that it left it. So see here it took a tiny bit longer than usual to come back to it. And it's like, well, is it true that within this consolidation, the one thing that it has been doing at all times has been to return back to this level? So it's like I said, why not make it a target if you're going to be doing anything in this level, but trading from it? How many times have the original people been made at a loss again? So it's tough, tough. But it's a fact though. So if it's such a fact that these people are treated so negatively, it's good to not be one. Because you can see, I mean, what the result of being positioned from that point would be, or what it would be to sell to those people instead, to take profit at that level every time that it gets to it. Because is it not true that no matter what move that we're in that gets back to this level or back to this red level here, is there a chance that it reverses when it gets to it? Or is there a chance that whatever profit that you have when you've traded back towards it, there's a chance they go for it and try and take it back? Or anytime that you've ever tried to trade back towards it, they could come back and try and take it back. Like, imagine you took it here, is it like that going to take it back? How much did it try to take it back here? And then again, in this portion here, it took nearly all of it back. So what it's saying is the people that are in have to be comfortable with these pullbacks if they're ever to manage to hold their positions. It has to be part of your trading strategy to allow that kind of a pullback. And who would allow that kind of a pullback? Well, I know that the hedge funds are in a situation where their long trades don't even have stops. That's how critical it is to them to make sure that they're hedged. Because do you think that if they put stops on trillions of dollars, do you not think that the market would get the insinuation that people were trying to sell? So they can't put their stops where you think that they are. Maybe on dark pools where people can't see. That's why they invented them, so that people can't see. But this is the 300%. Effectively, we have made it exactly the same distance out of the bottom that we did the top. And it is the case. Is it the case that what we did before was remarkably similar? When we did pull back to the B point, this was the case. It started out, the first things first, was there not a lot of space between the red yellow lines? Did it not have a lot of space to chop? And then when it did chop, after its chop on the gold zone there, which you can see it did not make in that original picture, no chop yet. And then when it made the chop, it dumped down to the B points and it hit that B point square right on the noggin. And then that B point also was a 61. And it rallied through every downtrend that it made. And every single person that was associated with that selling pressure down to that B point, what happened to them? Where is their position? What is their position worth now? Nothing. It's a losing position if they still have it. So they've either been turned into buyers, by being stopped out, fueling the ability for it to go up even higher for those that have assets at the bottom, or um, it's very clear that it's been very much a squeeze for the people that have been fighting against the trend. And for what it has offered, it's offered the POC for every single time that anybody's pretty much analyzed a trend break that has went away from the POC. When that trend broke, where did it return to? Did it ever take 2 times, 3 times? Why is it so good about doing that? And what could it mean that we're getting farther away from the original spot than ever before? Could it mean that we're done with it? Could it mean that even in the event that we return back to the POC for the final spot, that it might be interested in a different area that doesn't associate with this level? And I'm like, yes, 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 we're getting closer and closer to never seeing this level again. And well, for the rest of the day, But at the end of the day, what we do have to consider now, with the close being so near, is the imbalance. A report at the end of the day increases volatility, and it can affect any positions acquired today or any hedges that want to be obtained? Isn't it true, like yesterday, that they've made it very difficult for anybody that wants to have a hedge trade going? Now, of course, the negative response to the red-yellow line on the daily could provide an interesting hedge. You know, it'll be a hedge that I think starts a consolidation because it's dying to consolidate on the green zone. And I mean, you want to know what's funny about that? Is the consolidation that it could do could be like a consolidation that we've already seen, like this one. And I want to take it back because did we do it before? Why is it the same size? Oh, well, give or take, right? Relatively same size, same time, maybe even. Go back even further. Roughly the same size, not the same time, but definitely not seeing it too much. So I'm curious about it. I'm like, what is the appropriate amount of pullback to be able to get this kind of movement? Well, I can see clearly that every time we've done this pullback or this one, what has been the generation, like the result of it being able to do that? Well, I'll tell you one thing. This amount of pullback, this amount of chop, this amount of time, this amount of size, it has generated this movement more than once. Now, forget the downwards movement for a second, okay? Let's look at what it did here. Is it not true that when we left this range, you know, the pinnacle of its ability to chop has roughly been the same spot? Like, I mean, it wasn't the same in exactly, but roughly the consolidation took the same amount of time and space, and then it produced a move that was otherwise very similar to the move that it produced last time. Even say like the majority of that move, like where they like watch where the explosion started to where it ended, you know, like that's very, very similar in many regards to what we did in this environment. Like, it's not a hard argument to say that it started from there, that that move right here, I'll make it red, and this move right here, I'll make it red. You know, did it start from the ironically ascending triangle? You know, flat top triangle? Hardly. I mean, it had a huge spike out the top, but it's just something to consider. The size of the consolidation can impact the ability that or the move that it has after it's done consolidation. And I mean, just like we saw in the last pullback, um, we did this move before, and we've just done it again. Basically the same kind of move that we had to get into this area. Like, look at where this starts at the bottom to where this ends. It's very, very intriguing. Like, let me use a different shape. For instance, let's take a look at where this starts and where this ends. As much as it is a lot choppier and so on, I do think that they're very relatable. At the end of the day, we've managed to make it into this gray zone, which is the final zone that I managed to put on there in regards to this channel below. So I mean, like, everything that we've done here has debatably produced what typically would come back to test. Now it's funny because it's already done that. Strange, but it's true that the consolidation led to a push out of it, and everything that was part of that push came back. Is it not true that everyone that was part of the trend break, anybody that was in before the trend break, didn't get overlapped, but anybody that tried to chase, anybody that saw that the trend was breaking and then wanted to be part of it, If they weren't already in when it was quote unquote tough, they don't, they were overlapped. The market didn't respect where they were in from. But the people that caught the spikes and wicks at the very bottom could say were more respected. All of them are unsafe in this area. Of course, it's 1,000 points off the ground. They will be part of the next retracement. Trying to hold for a multi-day run from a point like this is not as attractive as if you're in from multiple days ago, you can continue holding for multiple days to come and likely still be part of the next retracement. Because if you're in from here, you know, you, it's likely that your hedge trade will one day become worth more than your core. If you're in from a few days ago, from before AMD earnings, whatever move we do next is not likely to come and take you out. So you can hedge it, knowing that your hedge is likely to get stopped out and you're going to go continue making money on the core that you should be holding. At the end of the day, not for one second did I ever change my mind that everything was supposed to go up and it was all supposed to go up and everything was down. And the whole idea was capture the exposure to the upwards movement and find a hedge if it's so in need of being sold. And like I said yesterday, I said, if you're long and you're tempted to sell it, try trading against it with half or less of your position. And soon you will learn quickly why you shouldn't sell it, and that's what I said yesterday. Because a couple of hits trying to short against your position, you'll really realize how bullish it really is and how much you really should be holding and how much it's not being favorable for anybody that's trying to short it and how valuable your position truly is, even though there's a bunch of risky events coming up. Didn't matter. The name of the game was to hold through all of them. And, it involved buying into the big dip and understanding that it was all going to reverse and that everything could be like I literally said before AMD earnings, and you'll find in the next video that I literally said AMD could be the pinnacle of reversal on the Nasdaq index on the daily. Those are my exact words. And it was for 1,000 points. Maybe that's not a lot, but it is. A lot, in my opinion. 1,000 points is a lot. And it was the pinnacle of reversal for 1,000 points to this point. And if it's not a lot, so be it. But it was the pinnacle of reversal for 1,000 points, and that's a fact. More than 1,000 points, to be honest. But that's okay. But you can see like my hesitance at the beginning of the day, even just to find a hedge. It's all about making sure that you're safe, and number one, making sure that that you're not fighting against the trend if you're not long already, because the name of the game, the necessity is to be in the core. The hedge is a luxury. It's an addition. It's a bonus. If you manage to get any profit on hedging, it's a bonus on top of what you're waiting for your core to produce. And we're almost at that green zone above, ladies and gentlemen. It's like very close by. Now, you want to know what I find intriguing about this point is that we're nearly the same size out of the bottom of that we did make out of the top, which is intriguing. I mean, could it lead back as swiftly as it left? Like, could we make another one of these spikes? Because what happens when we made this spike out of the bottom here? Was it interested in producing one on the other side of the entire triangle? Could we do that here? Or does it all come to an end? What can insinuate that it comes to an end? Well, maybe trying a little bit and then what? Making a new high beyond that. Well, that would be something new. If we don't come back to the test of the triangle, we don't come back to the test of this area in the middle. In the event that it can pull off a new high, having not tested that middle area, well, that is a move of disassociation with this area. Literally. How is it not? If it's in a sequence mathematically proven to come back to this line, and it chooses to move away stronger than it ever has before, and then change what it's doing and not come back. Well, has it changed, or are we still going to be mindlessly assuming that it's doing the same thing, even though it's proven to be doing something different? And it hasn't even done it yet. I'm just assuming it's going to. And look at it go to new highs. Why is it not coming back to the same level like it used to? All of a sudden, everybody that wants it to come back to the same level, why are they all at a loss now? Very interesting to me. Because there is nothing to the ordinary person that would tell you, hey, it's going to change now. Like, you have to use your discretion to determine the, the dangers, you know? One way of being able to determine the dangers is having experienced them. So, that's one thing. And we don't always have to go through them ourselves to be able to learn from them. Like, you could just be watching and be like, oh wow, these people, they're not going to get back to the main area. It's literally going to go through to the new high, and it's never done this before, and we're assuming it's going to. Why? And how is that possible? And why does it say on command that it shouldn't do this? Well, it's interesting. It's because it's done this before. It's because it's been an expectation before. And if it's already been a plan before, well, isn't it that much easier to implement? At the end of the day, we've managed to test so many B points today. Do you know that we have a 5-wave move right now? We have 1, 2, 3, 4, and 5, and it's terrible. One thing about it is the first wave is literally higher than the fourth wave. Where did that come from? I've seen many things like this one we've seen today, where it's, oh geez, I can't even draw it. This one we've seen today, like sideways, and it meets in the middle, but overlapping. I'm like, wow, that's something. And we can't be fooled by when it makes this or when it makes this. It is the same thing, just to be clear. But at the end of the day, it's one's pointy and one's rounded. The same components are all there. And it is an S wave, both of them. And like, even when we do this, of course, like as I've said many times, like this is one way that we can produce that movement. It's just the downwards motion can look like this sometimes. Well, you might think, oh, that's terrible. At the end of the day, this trend is subject to breaking, but is it going to be another fake break? Can it do anything more than get past the fourth wave? Any hedges that are taken ever in this environment here, in the event that you get to the fourth wave and you cannot make it profitable, look what happened. Look what it decided to do to the people, right? It went 5, and then where did it come down to before making a new high? It came down to the fourth. And then literally, it was like, hey, if you didn't know that that was the profit target, every single 5-wave move that we've ever done's only come down to 4. Why'd you think it was going to do anything different? Interesting. And then it literally showed them all. It's like, well, slap on the wrist. It was the profit target for that moment. And we're grinding it now. I mean, what's the difference to what we've been doing? That it's an interesting environment because I can see many people are learning that lesson right now, and it's one that it's unnecessary, I think. Because the day's ending, and I think that it's going to be an end where they try to keep the progress that they've accumulated. A little bit of a dump at the end of the day is absolutely okay. If they wanted to create some indecision at the end of the day, that'd be a great way to do it. Now, one level that I'm looking at is actually this one. Like, could we get up to the 188-200, which is my green zone, and create this giant S wave? Create an S wave out of the whole day. What are the odds we do that? Because watch what happens when we hit that B point. There undeniably is a giant node there. And I do not believe that it is physically possible to create a node of bigger size anywhere else. So being aware of the need to hit that level, it's just like this one. It's just like, holy crap. Let me look here for a second at this next one. I'll see if I find any similarities for this other day. Thought I did for a second, but I realized something else. Yeah, I cannot help but notice. I scroll past this kind of environment here, and I'm like, well, oh, this, and I'm like, well, simple, right? It started in a range. That range, look at all the volume in there, right? It's stuck in the middle. But then I look out the top, and I'm like, well, what would be the distance that we need to get to the B points down below? And like, did we just do that on the top? Why so particular, huh? Because like, it would be perfect to make that even at the bottom. And it would get every target if we did do that. Why would they make it so precisely sit on top of that node? Like, that's basically the move that they require to clear everything out. And then I look at this, and I'm like, well, like, forget about what's going on in the middle. You understand that the market literally decided to take this move in the middle, duplicate it out the top, and then push it out of the bottom. So it's capable of using ranges like that, and the value of finding exposure to it could be relatively high. However, only with hedges and only with half the position or less. And it could be the value of capturing the response to that 188 200. You want to know what's funny about that though? Is it's a bullish pattern, even though it gets all the way down to here. Because it will be sideways, it will be up, and it will be down. This leaves with a downtrend always. And I mean, this could be the entire day where it takes up 80% of the day dumping. Nearly every individual in the world will think it's bearish. Little do they know, it literally is a bullish pattern that has always broken that downtrend. Every single time we've ever made that pattern, it's always broken the downtrend in the history of mankind. We'd still be in the same downtrend that we never broke. But it did break to get us to here. And it's always went up after it's went down. Did you know that just like in a falling wedge, like, wow, how similar, it falls down into the bullish pattern so that you can buy and it goes up. Yet when people see red, they think it's bearish. They want to sell. And it's human nature down to a science. Now, like, it's crazy to think that the people that move the market like this understand that science to a T. They understand exactly how most of the people are going to feel when they make a move in the market. They understand how most of the people are going to be positioned, where their stops are, exactly what their inclinations are, where their take profit orders are. And if they see like a bunch of bracket orders coming up in a small range that prevents us from being able to get out of it, best thing to do is eliminate them so that we can move freely. And that involves slow. That involves pullback. When we do that, a lot of the people that were associated with this push up right there get wiped out when it goes down because they can't handle it. And then when it gets back to their average price and threatens to come down again, oh my goodness, that's emotional roller coaster right there. Because they see the glory again and then it's taken away, crumble under the weight of the own profit. And I'm like, it's common. I just see it. I mean, like, when one person does it, the next person doesn't learn from it. It just happens to more people. And I'm like, well, and then people try to do things to avoid that feeling, and it becomes trading about how you feel. And I'm like, well, now you're completely lost. So don't do the feeling thing. It's all about like remember the grade 3 math test that you knew the answers to, like I say. It's like you fill in the blanks, you know what you're doing. There's no emotion about it. But when you don't know, then you're worried about, oh, I'm going to fail this test. It's going to suck. Everything's going to, these terrible things, and then you still fill the blanks in anyways, but you know you're doing it wrong. And it's like, well, if you had the choice to be able to do it with the information readily available and easily fill in the blanks correctly, there would be no need for the emotion that you would otherwise have if you didn't have the correct answers, right? So I'm like, well, why would you do that to yourself and sign up for a test, right? When you don't even know how to do the math questions. It's like it doesn't make any sense, right? So makes a lot of sense to me to make sure that you are absolutely confident with what you're doing before you do it. Just like if you got to choose when your math tests were, you would make sure you were prepared for them, obviously, right? So it's like, and in this, you get to choose when you trade, So it's like it's a very good way to look at it. Yet school is probably a negative thing when thought about for many people, which I understand. Probably could have used a better example, but everybody's familiar with it. Like I would like to think, that's illegal not to go to school here. So everybody has to go to school. So I would assume everybody's done it at some point, at least. Like I didn't finish either, so I mean, no shame if you didn't finish either. So at the end of the day, here we are grinding the crap out of this blue and white line. It's been in the picture for quite some time, and the intention of it was to get used as it is using, as it's using it right now. The idea that we're coming back to it, grinding it, testing it, almost like it's a POC on an angle. Now, it doesn't last forever, and everything that it is doing while it's doing this is making it difficult for people that otherwise want to get short, right? And you can see that because every single time, remember when I said before we could be grinding on highs like that? This is what it's that environment, like doing this. It's terrible. It makes people in a really tough position unless you can actively manage in, and you take off two contracts and the other one gets stopped out. Then you actively manage in, you take off two contracts, the other one gets stopped out. Actively manage in, take off two contracts, the other one gets stopped out. At the end of the day, it can be like, okay, you've done that successfully 3 or 4 times. We get up to a level that's actually serious. You might try 5, depending on how it's went for you. It's not the same for everyone. Depends on if you've even been interested in hedging it at all. Um, you know, as well as how much does the negative response off of the blue and white line offer? Well, it's true that the best that it has ever offered is what it offered originally, and it has offered nothing more than that since it's offered it. And that's what it's offered regularly until now, that it can't make even that. It can only make this. And why can't it make that? Something wrong with it? It's like it's a fact that it's not making that anymore. It's only making this. I mean, what's next? We go even smaller? What happens when we can't even go smaller than that smaller? Do we change? Do we go down? It starts to become what could be a worry for people. So things start to change, and effectively it starts to slow down. Momentum starts to get smashed. The candlesticks are just absolutely tiny now again, and effectively it's good to understand that this is how things change. This is how, like, it's I'll tell you one thing. You cannot continue trading and avoid this environment again in the future. You could get up and walk away from the computer every time, but then you will understand less every time it's presented. God forbid you have a position and you want to know how to manage it, and it's doing this. At the end of the day, like I said earlier, it's no way to learn if you avoid the difficult environments. How are you ever supposed to make them easy? You know, the first step is trying to do that, and like actually putting effort into, hey, I don't like this situation. I don't like this environment. I don't like what it does to me. How do I change how I am so that I like what it does to me? Or how do I position myself otherwise so that I am avoiding this uh, negative environment or making money because of it. If it is oh so clearly going to hurt you, well, can you benefit off of it then? If it's that clear that it's going to happen, it becomes another question, because it's not it's not a matter of just being in and selling out of the whole thing anymore. You have another opportunity to do something else where you can actually continue to keep control of the situation. And when you've hedged something and got your stop and a profit on that hedge, it means that there's a significantly less risk in continuing to hold that core. That's just the way it is. And originally, I mean, people, they would buy uh, options contracts to hedge against their stock positions, because at the end of the day, if you're effectively holding a position that's a very long-term illiquid position, and there's a very short-term risk coming up, you could buy an options contract that would have short-term exposure to that event for a small fee. Um, and in the event that that event was a risk that formulated into a downturn against your position, you could profit greatly on your quote unquote insurance policy or options contract. And there's many other ways that you can hedge without using options, of course, but it's good to understand that. And honestly, it's so much more complicated to get involved with hedging a stock position with an options contract. Because when you hedge a stock, like let's say for instance like AMD, or maybe not AMD, like something like Ford or something. Let's say you've been in the Ford and it's terrible, it's like sideways for like decades, but then you decide that there's a point where you think it's going to come down, and you're like, all right, so you open up Ford's options chain, it's absolutely crap and there's no volume anywhere. And then it's like, okay, well, when you no movement on anything and it's terrible, and essentially you're like, okay, well, now I have to work with this chain of options to be able to hedge. God forbid nobody wants to you know buy my trade. And even if you're right on your options trade, somebody might not even be on the other side of it to liquidate you. And that's just a bunch of different problems that can happen in regards to that. But doing it with a major index is a lot easier. I only mention that because people in America especially are gravitating towards trading options because they can put less money into it and try and get more out of it, but there's more restrictions, um, more variables, and ultimately I would expect it is more difficult for many of them. And like the rest of the world, they provide uh, a lot more margin than is available for stock traders in America. So it's just not as appealing. But you can open a stock trading account in like in Europe, and with hundreds of dollars and trade thousands. In Canada or in America, you can't do that. Canada, you can with CFDs. They can give you a pretty good margin rate, sometimes even 20 to 1, is far higher than you'll ever be able to get in an American stock brokerage. Which is funny because you would think the Americans would have an advantage being the Americans, but no. And I used to think that, because America was doing so well, they would put these restrictions on the public, right? I used to think like, oh, why would they do that? The PDT rule, the only country in the entire world that has it. You're not allowed to day trade unless you put in $25,000 to your day trading account, and then if you don't, you're not allowed to day trade more than 3 times a week. So if you buy into a position, you can't sell it that day. If you do that more than 3 times in the week, they'll lock your position down for like 3 months, not let you sell it. God forbid your account's okay by the end of it. But why? How's anybody supposed to get ahead? It's like at the end of the day, it's not going to be with day trading. It's not going to be with actively managing their position. Certainly not going to be with hedging. So interesting. And I'm like, who voted for that? Because I hear, it's supposed to be everybody votes for the thing that everybody wants and everybody like agrees with it and stuff. And I'm like, nobody would agree with that. Who agreed with that? I don't think anybody did. Somebody just made that rule and nobody even knows who made it. But we all just live with it. Well, not anybody that's not in America, but it is the case. That's like something like if I was American, I'd have a problem with that. I would be, where do I vote against that thing? Like sign me up for that for sure. And like, who voted for dark pools? Like, what about the individuals? Like, can we have like an exchange that we're allowed to trade on and the institutions aren't allowed to trade on it? Because like that would be fair, but like nobody does that. I'm like, damn. Yeah, good luck getting that too. That's a joke. That's funny. I really I didn't even think about that. The individuals being able to do like a peer-to-peer trading thing and actually be able to see what the average individual could move the market against each other with, because we haven't seen that since like the 30s, I think. It's quite interesting. But like one of the things that I have come to realize is that there are events where the people do flock together. And then the times where they're not flocking together, it's the institutions trying to piece back together their control that they otherwise had before the people flocked together and thought about this big event, or all started panicking because of something, or all started reading the same news and feeling the same way. And that's what they love to do. And I'm against that. Like, I have a problem with that. Like, I don't like that at all. I feel disgusted if I find myself doing that, which I don't, because I don't like feeling disgusted. And at the end of the day, it's it's like a preventative measure. Here we are getting close to the 188 200. But I'm getting a deja vu situation with daily lows. Like, I feel like it's a matter of, it doesn't matter how many times I say to keep the long, people will not keep it. And it's very much the case of very tough environment that, it doesn't matter how much it's not working for you, it is the right thing to do by the end of it all. Is it not valuable to be in from here? Is it not true that being in from there, there's no way to be in from there if you didn't endure this pullback, and then this pullback, and that one there, and then when they took the whole thing back, you had to endure that if you're to be in from the best price, right? And also all of it. No pullback was farther than that level. That is the best price. I have a video on that day too. The entire day. Exactly what I was saying to do. And I'm not even going to go into it because watch the video. But it is much impressive. As this move is, except that move was 5,000 points, not 1,000 points. And it's still in play. Ironically, I think that everything that we have done, just like the first move on the daily, like when we made this move on the daily to begin with, there was a little spike on the high, and you could just see the entire time, the entire consolidation, those that decided that that was the point that it should be the red zone, and they held a hedge from that very point right there. Look at how much they had to come back on them. So many times they came back on them, so many times. But anybody that valued acquiring a short position in the red zone was undeniably safe all the way to the green zone. And to continue holding through the entire thing, to develop a hedge against it would have been the best way to go about it. But at the end of the day, when we got into that green zone, that was when I understood the relationship with that red zone. I understood the value of being in from the lows could break the entire trend that got us here to get us to the red zone. That carried on through here, through there, through here, through there. That trend never never got erased. It was always the target. and it's about managing it well. Managing it from the bottom, deciding to keep what's good for you and not decide to give something up and then try and get it back in the middle later. Like this kind of movement, when you capture that all the way up and then try and fight back for your position here because you sold it at the high, not as effective as just hedging it back to this point and taking profit. Because you know what? When it does this, if you're trying to buy your position back, you got to worry about every single time it makes one of these lows. If you've hedged it and you just take profit right here, does it matter that it makes a little bit of a noise past where you took profit? No, it doesn't matter. You don't have to watch it like a hawk. You don't have to sweat buckets like everybody else because this is made for people that do that. It's not made for people that give up their long trade and can't do anything about it and get back in halfway up the move and then complain when it treats them badly. Because it's undeniably it's in the middle. Now, it is at a point where we have to understand that breaking the trend is something of an interest. We are at the 188,200 and it can come back down to the B point. It could come back down to every single one of these levels. We have to watch out for it to try and return back to the purple bar for the end of the day. And the 188,200 was the point, in fact, that it did decide to return to here from. And if you can't manage to take off enough profit on a move like this, it's 14 points. If you've taken the smallest increment, that's $30, $30 per contract. So if you take one contract off, that's $30 locked in, and at the end of the day, uh, two contracts, $60. The last one, what is it if it goes to zero? At the end of the day, it gives you an opportunity to try again because your next stop will be contained within this profit. At the end of the day, what is the stress if you have one? It's like let's talk about it. It's like if there is one. I mean, maybe you're struggling with it. If you're struggling with it, then we have to figure it out. And at the end of the day, it's unnecessary, I think. To the point where I'm confident that you can learn exactly how to make it so that when you've locked in your stop and made sure that the trade is profitable regardless of the situation, if it comes to get you or not, you can hold to the target safely and not manage the position. You understand that if you sell, you lose. If you touch it, you lose. It either comes back to get you for a profit or you get more profit while you're waiting for your long trade to profit even more. Because however much this wants to pull back, it's just a matter of time before we see that green zone again above. We have to understand that all of the profit that we see right now could be taken back. Does it get all the way to the B point down below? Maybe it gets close and forgets. What did it do last time? Could it do that again? Is it a smaller version? Well, I'll tell you one thing, right? Remember when I was talking about 5 wave moves? One, two, I mean 3, 4, and 5. Did we come back to the fourth and is this all we will get? Because it's not only just the first day that we've done this. Let me go back, like let's go way back, all right? Like all the way back. This is like the environment at the very low where we did make 5 wave moves that were capable of pulling back the entire trend. We went over this yesterday. That's cool. That's fine. That's absolutely okay. We could even see over here there was more 5 wave moves that were capable of taking back the entire trend. Okay, hold on. This chart had a heart attack at that point. A different chart. So okay, so we can see that the 5 wave moves basically at the very low, they started to like play out very well. Like we used to get 5 wave moves down, and they were clear. They would come like really far up, and then on the way up they would make 1, 2, 3, 4, 5. They would come really hard down, and that's very clear there. But then we would get into an environment like this here, where all of a sudden we would make 1, 2, 3, 4, and 5 and it would literally go sideways. And then it would go up. Look at how it went up. 1, 2, 3, 4, 5. And then what did it do? Did it go past the 4 ever? No. It only came to the 4 and it only went sideways. But what did it do? It went up. And then it went, here, 1, 2, 3, 4, 5. Wow, that 4 is so high. And look at this one. 1, 2, 3, 4, 5. It never even went to the 4. This one, 1, 2, 1, 2, 3, 4, and 5. It literally only went to the 4. And I mean, like, still building on them. Wow. At the end of the day, we came up to this point here. 1, 2, 3, 4, 5. The 4 is here. We really haven't done it. Or I mean, if you want to go 1, 2, 3, 4, and 5, where it never came to that one either. I mean, geez, is it ever something? Now, this was a portion right here where we could see 1, 2, 3, 4, and 5, and it managed to come back to the 4 here, which ironically was also the 2. But that's fine. And then here we are, 1, 2, 3, 4, 5. And under no circumstances has it ever been interested in doing anything but coming back to the 4th wave. And here we are again, basically responding to that same 4th wave. Hedges are really important, I think, in this environment because I think that's coming to an end. Oh, wow. Okay, so I remember earlier, how do we make it into ranges? Well, we hit them twice, no? Twice, and then we turned it into support. So is it not true that when you're associated with this green zone, we went smash, smash, and then we bashed through it just to step on top of it and then get a beyond the entire scenario, beyond everything. And then we come up to this level. How did we respect the green zone? Well, it went smash, smash, and then it bashed through it to step on top of it. No? Or am I crazy? Now, at the end of the day, I see a very similar kind of movement. We go back to a different range. This is an even older chart and it has the same 2 lines there. Let's look at this one, for instance. When we first used this green zone, I distinctly remember that when we were making the highs associated with it originally, it was the 2 smashes. Then we bashed through it, stepped on it, and moved beyond it. This is an even different time. So that's my point, though, is that it does that and we need to be aware of it, either accept it or neglect it kind of thing, because it has been doing it. And if we're doing this much of it, could we be in it? And is it going to continue to show us it? Well, probably less than it has showed us it already. We're closer to the next change than we are continuing to do this. Like, is it not true that when we do it, we're so much smaller than we ever have been? You don't think that's a signal as well? I think so, because it's showing that it's unable to do the thing that it did so great, so well. And I mean, the people that watch the profit and loss will understand that the profit is not as much in the same sequence of moves as it once was. And I can't help but notice that it is an original test of the 188 200 and it was unable to make it all the way originally to the D point, but instead it spiked back to itself in the form of an S wave. And I'm like, well, I see an S wave here that effectively tried to produce this out of the other side. I mean, it made up for it later. Like, this is so weird. You know how it dumped down that much there? Well, it made up for the fact that it dumped that much again, but by doing another S wave. That's the strange part to me about that. But it's okay. At the end of the day, the purpose of this S wave was to end with the same result as the move that brought it into it, and it did produce that out of the equilibrium, like out of the middle area. Like when it met that point, it undeniably was associated with this move. And even when we look at this crappy version right here, this movement right here, it did happen when it finished it, just not in the same, not in the opposite direction. Like it was capable of producing a move that looked like this, which is not this, and what we're used to seeing, something that had a backwards move. It's like, okay, we did do that. And where was it prone to making that backwards weird movement that wasn't normal? Well, it was in the purple zone, in the middle. Well, it doesn't particularly look like the middle right now, but it is the largest node in the environment. The second largest node that we have in the environment is the one that we're in right now, or leaving right now, should I say, because we've left it. After all, it is on a move that, subject to coming back to it. Like, we have a trend. And I tell you, the entire time that it was doing this crazy retesting, difficult to catch environment, that entire area is likely to get overlapped in the future. Part of me questions whether or not this node right here has a relationship with this one here in a way that maybe the spike on the bottom and then the larger spike on the top that happened out of this one could be happening out of this one too. You know, after all, we are getting a spike on both sides of both nodes, um, making one of them larger than the other was the case for the original one. And if it is for this one, then reaching to hit that B point ultimately could be the larger version of the original spike, because it is the original spike that is the smaller version, and then the larger version is almost double that spike. And in this case, you know, putting that spike below, doubling it might be a bit much. That would be the POC. But the idea, POC is actually the 61 as well. Like, is that valuable? How much, if we find more valuable things at that level, could it be more of a target? You know, what's at the POC? The exact 61? So it becomes a question, you know, do you think it's safe to put a stop above the 61 with it being that clear? It's not only the 61 people will find if they're looking at the volume node, they'll notice the POC is also an important level there. They'll notice that that used to be a B point there. They'll notice that that is the middle of the entire node here, that it was the point where, you know, it crossed over the most when it was doing this. And honestly, it gives me heavy deja vu with this kind of move. Something that, I mean, undeniably we've been interested in doing many times. Yeah, I'm looking at this and I'm like, well, if we do an S wave here, is it possible? I mean, it's an idea that we do that there. I mean, why not? If not, could it be the value of the break of the downtrend of such a small downtrend to be such a large move? Well, only because it's associated with this move. And what if I kept saying that that move can do? Well, it can do this move here. And if it does that move, well, that move is this move. That's a big move. So I'm like, well, interesting. Or does it do the whole thing? Well, that might be a bit much. But this movement right here, this seems to be a standardized amount of movement. It seems very clear that they made that move twice. It seems very clear that move made here as well. They plateaued at that point. So I'm intrigued by it. And I'm like, well, I see the same thing that we had here going on here now. I'm like, well, if we're in the business of looking at the other things that we've been doing, what's up with the downtrend being a little bit different? Sure. But the support, I tell you, is awfully similar. At the time, there were trend lines drawn there, and I drew them based off of those trend lines. And in this case, undeniably, I can see that there's one, that there's two, and that there's 3 consecutive lows. And that can reverse to the first of the 3. Basically, the first of the 3. Like, markable, even. And it insinuates that the break of the falling wedge could be absolute crap, just get to that level. And I'm like, well, I am curious of it because that means that it's a return back to the B point, or no, sorry, back to the node, and that could be the value of the falling wedge playing out. Now, what did the last falling wedge play out like? Is it true that getting to that point could be after a move like this? Well, because if it has anything similar to the other triangle, like it did here, could it make that move again? Because it's the same time as that triangle. It is an interesting idea. However, there are a lot of maybes in the middle, and it's just good to familiarize yourself with the variables so that if there is anything that is clear, then you understand exactly what the facts are, and I think that that's important. Regardless if I have any interest in trading in this area, God forbid, it wasn't made clear. That's the way I look at it. It should be. And I mean, what's up with the 38% retracement? How many times have we had a 38% retracement today? Is that a common thing? A 41% retracement? Basically the same thing. But, they both go hand in hand, but they're undeniably what's been holding us back so far. It looks like we're a bit lower than it now. Not much triangle remains. I can see that the tip is at the B point that is untested. I cannot help but notice that the distance that we've left this one untested is awfully similar to what we've left some untested down there. And I mean, what's that bad for when it doesn't get to levels like that? After all, it's a very small distance, and I would hope that it wouldn't be the make or break moment. Like it's good enough for profit taking when it gets this close. Because what if it doesn't get there? What is the next option? Well, what it did last time. Well, it means that everything that it did last time, every bit of that pullback, every bit of that falling wedge, every single bit of everything that it ever did gets sucked back up to the top. And that could mean that because you're not interested in taking profit a little bit close to the B point, you get caught up losing your entire profit because you were not managing it or something. I'm like, well, I mean, I'm not a greedy person. At the end of the day, you can see that it's being very tough on the people that, like the robots that are like, I take profit at the B point every time. Like I've programmed an algorithm to take profit at the B points. They're all failing because they're not getting to the B point. So it's like at the end of the day, I can see that that is the case. And I think who's it not good for? Well, it's not good for people that program robots to take profit at the B point. B point. It just doesn't work. Like it hasn't worked. Should I say? It's not that it won't work again in the future. It's that right now the robots that are programmed to take profit at the B point are not getting their profit target. And instead, if they have any kind of trailing stop, they're going for that trailing stop and knocking it out before getting to the target. And in some case, not even getting to the target, like we've seen here. all of the most major B points that have been left here today, that we've had in association with major moves that could otherwise provide a lot of profit in the return back to those B points, why doesn't it hit them all the way? They're more than considered played out, like this one. I mean, that one played out like very well as well, but it didn't get all the way there. And I mean, it shouldn't really matter for those that take profit at places like these, right? And at the end of the day, that's how I make sense of the situation. And it's not an amazing situation, but slow one that meets back to the middle as frequently as possible. Sometimes it tries to make that middle on an angle, like what we've seen with these blue and white lines. Originally, this blue line, like, do you see how much it loved to be at that? And then we continued to be at that blue and white line. The first of the 3 B points has now been cleared. Is it not interesting that out of the 3 moves that we have here now, that this B point was untested, this B point was untested, and then this B point just got tested? I mean, like, what on earth is that like here? Because every single one of these is untested, untested, untested until now. So it's like what it shows is that it made a 5-wave move, came back to the 4th, and that's it. And then what sequence are we in now if we consider this the move? And if it comes back to this point, is it not coming back to the last in the sequence? And it's done that. And maybe it's not the 4th that it comes back to, maybe it's the last in the sequence. That just so happens to be the 4th more frequently than not. But if it makes 6 waves, then pulling back to the last in the sequence could be like pulling back to the 4th. A little complicated, but it is the math behind it. And it's quite straightforward, really. But it's a matter of it doing patterns that we see regularly, and then now we're looking for it to change those patterns. We're looking for it to actually do something different because it actively is doing something different, as we saw in here. Now, every falling wedge that it has done so far has obviously worked, or we'd still be underneath one of them. Sorry, yeah. Every falling wedge has worked, or else we'd still be underneath one of them. So essentially, I'm looking at this one here with the idea that in the other falling wedges, it was the return back to the bottom of them that provided the best entry for the break of the entire trend. Now, it is true that just a moment from now, we could be at the 61, which is also the POC. Um, Controversial level, I'd say. But it is also true that now we're responding to the high of this node. And that node is what we're inside of now, close to that 61. And it's right in the middle again. So, I mean, the 61 is basically the middle, and it's off of the first response to that green zone at the high. I do believe we will see the green zone again. But I'll be right back. All right, looks good. Breaking the trend, getting back to the tip of the triangle, basically, the top of the node, awaiting imbalance. Now we can see it's made both sides equal, one at the top and then equal out of the bottom, well, and returned back to the middle. This is like the move that would be considered the retest. The continuation is what leads us beyond the point that it tried to retest. Not bad. Probably a 260, 40, 27. Got a B point up there, roughly near the 61. Something I think that we might be interested in by the end of the day, contrary to popular belief. Near the 61. So like, we're in the continuation phase right now. Might have a little bit of trouble with the continuation phase, but that's okay. It's ultimately trying to do its favorite pattern of the day, really, which is essentially making that S wave. The S wave that I suppose could be related to a 5-wave move that likes to come back down to the 5th wave. And I mean, we might not even see this tomorrow, or I mean the next session, but it could be grinding the green zone for the whole weekend. I like that idea. All the movement that happens after hours and on Sunday and so on just grinds the crap out of that green zone. Maybe we get a negative response to the red yellow line when we first initially, make our way to it. What would be cool is if we actually grinded and grinded and grinded, and then, it goes on forever, but then it hits this level, and then what it does is actually comes down and knocks everyone out of this, and then it goes up. Obviously, anybody that's holding from below is fine, but the people that try to keep their positions from the very close, you know, close to the average or current price, it's not very safe, because it could be very likely to be contained within the next retracement that we do. On the bigger picture, because I know we're moving up like this right now, and deciding to move up, and eventually, like when this movement, ceases to continue, it it will likely show us more of this again, the thing that it came out of before it was doing this. You know, it's clear to me that that is the case. So, and I've watched every single move that it's done since it's been in this environment and then in the last, so I can remember them. Which helps. At the end of the day, is it not true that we came down to the 61 here? The 61 is what we managed to do. Could we do another 61 as we did before? Last time we were in a counter trend pullback. Is it not true that we did a 61 here? And then we did a 61 here. And is it not true that that entire environment associated with pulling back to 61s was all it did when it pulled back? Not for a second more was it doing anything else but that. But making sure that the 61s were the pinnacle of reversal for the time that it did spend in that consolidation. Now, of course, the imbalance is coming up. And it's the end of the week imbalance. And it's, of course, like, well, our previous symmetrical triangle, or not symmetrical triangle, falling wedge, did this. What did we do here? Did we manage to pull it off after all? Because from what I can see, the last symmetrical triangle that did the same thing, it did this, except it was better at doing it. At the end of the day, is it not true that as soon as it created that downtrend, it created another one, like this? And undeniably, that is the downtrend. And until it breaks, we are contained within it. And it was the same with this one. You know how we started out and we had a falling wedge and it was like that? It even came down to retest it. But it's true that it created a new trend. And it broke that trend even harder and decided to retest that. So that's the sequence as we've done it so far. Now, of course, with the imbalance coming up, everything could be pretty slow until then. Everything that we do up until then is also in anticipation of the imbalance itself. Now, of course, the original blue line of the day was here, almost a line that I feel the need to identify a little bit more. I'm going to make it this one, this color, because it's older, okay, than the blue and white one that's on there. Still really relevant because it's not your ordinary blue line, but it was the first one. And I mean, like it was really spent an effort at making sure that it made that rising wedge, the purple triangle, and it made a spike out of the top and it made a spike out of the bottom. Or in other words, it did this. And I mean, I could do this spike out of the top and the spike out of the bottom as a circle too. I mean, it depends on how you look at it. But it's essentially produced the same kind of movement that we did before, and now we've done the same thing with just an even smaller movement, even crappier. And now, undeniably, there's a new trend there as well, so we'll consider that. There's 5 minutes till the imbalance, and that's okay. This is interesting to me because it literally has five, 1, 2, 3, 4, 5, and I'm like, well, why is it that that's the case now? This Jack, no, sorry. The 5 wave move. Hey, know that 5 wave move has two counter trend pullbacks. and they are roughly the same size. No other move since this trend started has been of that size against the trend. Now, undeniably, just because it makes 5 waves doesn't mean that it has to break the trend. It means that that trend does exist now. It means that the time that it has between now and that trend can be considered as a risk. In the event that we find something that's capable of holding us for more than 5 minutes, we might be able to break that trend. Now, the value of that trend break could be to get the B points, the 61. Now, what could keep us here for 5 minutes? The imbalance? The VWAP? The VWAP is huge. It's the beginning VWAP for, I mean, it's 1133 VWAP, but still, it's pretty significant. It's the last VWAP that it decided to pull back to when it did pull back the last time. Let's see if that changes. Because, at the end of the day, when it pulled back to this one, the VWAP was down there. Now the VWAP's up here. Because the average price of all of the shares and contracts since that point has now risen as we've managed to make a new high. So imbalance is coming in, and we're looking at trying to break the trend on the imbalance. Volatility is undoubtedly likely to increase, even if there's a little bit of a delay. I question whether or not this node down here, which is very similar to the node that we had up here, which if you look at it, has a second wave and a fourth wave. Both of these nodes were the same size when we were making the counter trend move. And that is good. I mentioned that we might pull back for the end of the day. It doesn't really change much for anybody that has a long-term horizon of getting in and through the green zone. And essentially, um, it allows for hedges to be profitable into the end of the week so far. So protecting them at points like these are key. Imbalance, 1 minute away. These are all preliminary moves to the imbalance at the end of the day, at the end of the week. Another thing as well is the fifth wave similar to the first wave, and could the VWAP take all the volatility out of the situation for the end of the week? The imbalance was relatively terrible. Not much movement on that, of course. As I mentioned, it could be delayed. It's possible. Of course, there's not much time now still. I mean, even with the move we have right now, it's not much time until we manage to break the trend, which is likely to happen in the after hours session. But like I said, the green zone could get a hell of a grind. And this puts it in a position where until the end of the day, those that have a hedge are protected until it comes back to grind the green zone. Keep some profit taking orders at the B points if possible. If not, then that's fine. Just keeping the stop in profit's fine. But essentially, there's another imbalance that happens at the end of the day that could have a little bit more volatility. We shall see. Then they may decide to make it meet the equilibrium in the middle of all of this before the end of the day, which is fine. Ultimately, it'll look like a right shoulder. It does. A lot of people will short into that right shoulder just to get smoked out on Sunday from what it looks like. Like a third drive, I don't mind the idea of. Like, we make the entire head and shoulders first and then fail into a third drive. Little bit of an increase in volatility for the end of it, but not much. Gives me deja vu with this same kind of 5 wave move. 2, 3, 4, 5, and then the initial shock reaction was right back to that fourth wave, and it's like the same thing happened with this move, just in reverse. It's also the low of the node area where spikes were able to make past it. It's common, probably be the most smaller one. Then it's essentially managed to kill this. major one. Making it into a support and clearing the high, getting to the could take a grind, not like incredible move. A few minutes till the close here. Definitely isn't a good idea to make any new decisions before the end of the day, but for the sake of monitoring inclination of it brought us into this point here. It all started at that POC. We are. It's the 61. And it's like they moved it up enough to make that level. It's remarkably shocking how exact it is. And how far we managed to get above 15,000 was also quite intriguing. The point that white dash line that marks 15,000 is not on the chart. There are two VWAPs. Does that VWAP seem as far away as we managed to get? Question, because we captured the low. We are at the low of the node. It actually hasn't managed to make more. Very close. Of course, with this environment, is it not interesting that when we left this consolidation here, we left it to come back? And I'm like, well, when I look at that, I mean, where have we or did we not consolidation where everybody was part of that consolidation? Everybody came back to the part that started the blast, but all that seemingly was left were one spike and two spike, right? Okay, and I recognize that because I see them. Spike and two spike. And here we are, back on top of those spikes, as we were. Even in this environment here, is it not strange that, we left that as the point in the new trend? It never came back to it. That's what we did to conquer 15,000, in other words. We did to get through the green zone. A big spike and a little spike. And even when we get down here, you can see what we did to really get on top of this green zone. Was it not a big spike and a little spike past this point? And did we not turn that into support? We carried on to do multiple times within the trend. But there, of course, is the bell. And crazy. At the end of the day, it managed to progress up to this green zone, which I think that we'll see a lot more of throughout the next week and the break of that major downtrend. At least the test of it over the weekend. With that being said, hopefully you guys had a wonderful day and hopefully you have a wonderful weekend. I'll catch you guys later.
Excellent. Very nice.
Yeah, anytime. Take it easy. Have a good one.